All right. Markets desk is going straight to the movers board. Flat tape, mixed breadth. SPY basically unchanged. QQQ a little red, and then look at this small cap board just doing its own thing. CRE is the monster at the top, up about 189%. YYGH right behind it, up almost 80. PSNYW up 66. And then the sneaky part. RDIB and WVPIP have insane relative volume numbers, 800 plus and 600 plus. That's not normal traffic. That's the board screaming, hey, something weird is happening here. So we're not going to waste time. Top row first, then we rip through the charts one by one.
All right, top of the hour. Quick market minute reset if you're just walking in. It's Wednesday, August 26th, 8 a.m. Eastern, and the tape is basically doing the pre-market shuffle. SPY 765.5, down 5 basis points. QQQ 709.6, down 16 bips. IWM flat at 299.2, VIX 18.64, actually a hair lower. So this is not panic, not party, more like the market forgot its second coffee. Breadth is mixed, and the softness is a little more NASDAQ heavy, which matters, because QQQ is still the mood ring for the mega cap AI trade. Cross asset is the tell here. Bonds are a little heavy. TLT 83.28 down 0.23%. IEF 93.41 down a tenth. So yields are leaning firm, even though we don't have a clean 10-year print on this portal. The dollar feed is misbehaving, printing a bad zero, so I'm not going to fake a DXY level. Yen proxy is 57.65, basically flat. Gold's off almost 9/10 at 424.18. Oil's down 7/10 at 125.25. And crypto beta is soft too. BITO down 0.65%, coin down 1.2%, MSTR down 1.52%. That says the risk thermostat is lower, but there's no huge safe haven scramble either. Big driver later is the calendar. Mortgage rates at 11. Then at 12:30 we've got GDP, PCE prices, personal income, durables, profits. Basically the macro buffet nobody asked for, but everybody has to eat. Here at the macro desk, I'm watching QQQ 710.9 above, 708.7 below, VIX 19, and that 12:30 data cluster. Coming up, news intermission first, then the market movers board. And yes, CRE up 188% is not a typo. It's just Small Cap Wednesday, trying to be a circus. All right, quick news brief from the macro desk. Story 1. The U.S. just sold $69 billion of 2-year notes, and the auction stopped through by 0.4 basis points. Translation: demand was solid for front-end government paper. That matters because the short end is where rate expectations live. And right now the equity tape is basically shrugging. SPY around 765.6, almost flat. QQQ a little softer at 709.2. Bonds aren't exactly throwing a parade though. TLT is 83.28, down 0.23%. Classic macro. Good auction, muted reaction. Everybody pretends they're calm. Next headline. Mortgage and refinance rates are down across the board today. We don't have the exact rate prints on this card, but the direction is the point. Cheaper borrowing can help housing activity, refis, mortgage lenders, and anything tied to consumer balance sheet relief. Here at the macro desk, housing is always the slow-moving elephant in the room. And we've got the MBA 30-year mortgage rate update at 11 a.m. Eastern, so that's the next clean checkpoint for this story. Apple headline now. Apple unexpectedly released a new M6 Mac Mini ahead of the iPhone 18 event and raised prices again. The desk is seeing the price hikes tied to memory and silicon supply constraints, which is exactly where the AI hardware story bites. Why it matters? Apple can usually raise prices like it's adjusting the thermostat. But at some point, investors start asking whether higher ticket prices protect margins or slow unit demand. With QQQ down about 0.21%, tech is not getting a free pass this morning. Staying in mega-cap AI, Microsoft is catching heat for leaving investors with limited visibility into its AI businesses, especially around CapEx and cloud revenue detail. That matters because AI's spend is now both the growth engine and the electric bill. If the market can't separate investment for return, valuation gets a little foggy. MSFT is still one of the big AI pillars, no question, but this headline is about disclosure, not vibes. And vibes, sadly, do not show up in a cash flow statement. Then, Berkshire. Greg Abel, now leading Berkshire, has about 30% of the $358 billion portfolio invested in two major AI stocks, with Apple and Microsoft tied into the story. That's the big takeaway. Even the house that built its brand on patience and old-school compounding is heavily exposed to AI leadership. It doesn't mean chase anything. It means AI concentration is not just a retail theme or a hedge fund theme anymore. It's sitting inside some of the biggest, slowest capital pools on the planet.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. Let's find the fresh heat. Market's basically flat to soft here. QQQ's a little red, breadth mixed, but this board is not quiet at all. CRE still owns the top slot, but we already put the 7 and 750 lines on that tape. YYGH, PSNYW, same thing. Those levels are already live. The new one jumping off the board for me is SOAR. 30-cent stock, up about 92%, 28.5 million shares already, almost 19 times normal volume. That's the next chart. Then DAIC is sitting right behind it, tiny float, shell company label, high dilution risk. Oof. That's the kind of thing that can move like crazy and rug just as fast. So we're going row to chart now. No camping on the board. Here's SOAR on the 1 minute. This is Volato, private aviation name, Amex listed, and right now the tape is living right around that big 30-cent psychological line. I don't want to overcomplicate a penny stock chart like this. 30 cents is the scoreboard. Clean hold above 30, buyers are still defending the breakout zone. If it just keeps wicking through and can't stick, that's where these pre-market chasers start getting trapped. Volume is real. 28 million plus shares is not a sleepy print, but the float is also bigger than some of the micro-float stuff we've been watching, about 27.5 million shares. Platforms showing medium dilution risk too. So yeah, green candles are fun, but this is still penny stock tape. The Markets Desk wants confirmation, not vibes. Hold 30, build higher lows, keep volume in it. DAIC next, and this one's a perfect example of why you don't just stare at the percent column and call it a day. It's up about 53%, trading right under $6 here. But look at the setup around that $6 line. That's the whole read for me. Reclaim 6 and actually hold it, different conversation. Keep rejecting under 6, and this can turn into a nasty fade fast. Tiny float too, about 419,000 shares, so every push can look huge, but it can also vanish in 2 candles. And the board has this in the shell company bucket with high dilution risk. So yeah, chart first only. I'd treat 6 as the line in the sand on this one. Now, RDIB, this is the weird one on the board. 32% green, but the eye popper is 829 times relative volume. Average volume is basically nothing, 4,000 shares, and today it's already over 3.6 million, with only about a 299,000 share float. So this is where you've got to separate a real bid from just thin tape prints. If the 1 minute is building clean higher lows and the bid keeps reloading after pullbacks, okay, that's actual demand showing up. If it's just random air pockets, wide spreads, one candle up and then immediate rejection, that's not the same thing. Around $12 is the spot I'd keep checking. Does it defend, or do the pops start failing back through it? WVIP now. And yeah, this is not your usual pre-market momentum flavor. Winery name Willamette Valley Vineyards, trading around $4.50, up 35%, but the number that matters is 629 times relative volume. That's wild, but context matters. Average volume is only about 4,400 shares, so one real block, one burst of prints can make the volume column look insane. So on the 1 minute, I'm treating this as, is there actual sustained liquidity, or is this just print noise? If it can keep trading clean around that 450 area with repeated volume hits, okay, then you've got something to watch. If it starts skipping around with wide candles and no follow-through, that's where these weird thin names can trap people fast. NWE next. This is the one where I want everyone slowing down a bit. Nuwellis, healthcare device microcap. 126 on the quote, up 31%, 90 times relative volume, but look at the structure underneath it. Float listed under 50,000 shares, market cap under 100 grand, and dilution risk marked high. That combo can rip, absolutely, but it can also rug pull in one candle. So for me, this is not a hype read, it's a risk read. Is volume staying consistent? Are dips actually getting bought? And is it holding the 125, 126 zone instead of just wicking through it? With a float this tiny, halt risk is real, spread risk is real, and if liquidity dries up, the exit can get ugly fast.
Thanks, Markets Desk. Breaking here at the macro desk, oil is sliding to more than a 2-week low after Iran and Oman talks aimed at reopening the Strait of Hormuz eased some of the supply scare premium. What we know, the desk is tracking talks, and the market is taking down crude risk right away. Oil on our cross-asset board is around 125.25, off about 0.7%. What we don't know yet, the timeline, the durability of any reopening, or whether this actually resets physical flows. So the market read is pretty clean, less supply panic, less immediate inflation pressure. Energy gets leaned on first. Geopolitics, as usual, walks into the room, knocks over the oil chart, and refuses to clean it up. Next headline. Investors are waiting for clarity on Kevin Warsh's Fed plan out of Jackson Hole. The important part isn't some magic speech headline, it's rates. Bonds are already a little heavy this morning, with TLT near 83.28, down about 0.2, and IEF around 93.41, slightly red. So if the market hears anything that changes the inflation or rate path discussion, equities, the dollar, gold, all of that can reprice fast. But we're not predicting the Fed here. Nobody gets paid extra for pretending to read the chair's mind before breakfast. And one stock-specific headline with a bigger consumer read-through. Dick's Sporting Goods is getting hit hard. Shares down about 30% after a Q2 earnings miss, with the company pointing to a challenging footwear market. Why it matters? That's not just one chart having a bad morning. It speaks to discretionary spending, apparel, footwear, and margin pressure across retail. The broader tape is only mildly lower. SPY down about 7 basis points, QQQ down about 19, so a move that ugly in DKS really stands out. Coming up, we'll kick it back into the mover scan and see where traders are actually putting volume behind these headlines. All right, quick wide-angle check from the macro desk. This tape is quiet, but the cross-asset message is definitely not asleep. SPY's sitting around 765.37, down just 0.07%. QQQ's a little heavier at 709.24, down 0.21%. And IWM's basically flat red at 298.99. So yeah, equities look calm on the surface. But here's the tell. VIX is also lower, 18.65, down a hair. And yet stocks aren't really taking the invitation to party. That's a very pre-market kind of shrug. Risk is not panicking, but it's not exactly dancing on the table either. Breadth is marked mixed. Sector reads are basically pinned near zero. So the index tape is giving us oatmeal, filling, bland, and nobody's Instagramming it. Now, the more interesting part is outside the equity screen. Bonds are a little soft, TLT at 83.37, down 0.12%. IEF at 93.46, down 0.05%. So yields are leaning a bit firmer. That matters because QQQ is already the weaker major index on the board. If rates are nudging higher and the Nasdaq is lagging, that's the old duration trade getting poked in the ribs again. Meanwhile, gold is lower, GLD at 424.35, down 0.87%, and oil is lower too. USO at 125.21, down 0.75%. That combo says the market is not bidding safe haven and not bidding the oil inflation scare this morning. It's more like, take some air out of the macro hedges, but don't fully rotate into risk yet. The dollar feed on this tape isn't giving us a clean, usable print, so I'm not going to pretend that zero is a real macro signal. We have enough fake signals in markets without inventing new ones. Crypto's the one little yellow light I don't want to ignore here. VIX is actually a hair lower at 1865. So on the surface, you'd say, okay, risk is calm. But look underneath it. BETO's down about 0.75% at 1058. Coins off 1.4% around 184.51. And MSTR's down 1.7% near 124.73. That's crypto beta staying red, while the headline tape is basically flat to soft. And then cross-check that against the yen line. Yen sitting 57.65, slightly green. Nothing dramatic, but it's not confirming a full-on risk chase either. So for me, before the 1230 data stack, the board is pretty simple. QQQ support is that 708.70 area. Upside resistance is still 710.90, where the earlier push failed. VIX above 19 would tell me vol's waking up. And if crypto beta keeps leaning red while yen stays firm, I'm not treating this as a clean risk-on tape. Data watch into 1230. GDP estimate 1.1. PCE month-over-month estimate 0.1. Personal income estimate 0.2. Durable goods estimate 0.7. Will react to the print and the price action, not guess it. All right, that's the macro map. Let's kick it back to the tape and see where the real money is moving next.
Thanks, Macro Desk. All right, Markets Desk is grabbing the movers board because the indexes are basically asleep. And the small cap board is absolutely not. SPY is barely red, QQQ is a little weaker, VIX is soft. So when CRE is up 179%, YYGH up 78, PSNYW up 55, that's not market beta. That's pure pre-market flow. Look at the volume too. CRE, 13.4 million shares on a tiny float. YYGH, 44 million. SOAR, 72 million shares. Oof, this is where we separate real bid from pre-market air pockets. CRE is back on top after that earlier shake. So we're going right into the 1 minute there first. Okay, CRE on the 1 minute. This is the wild one. Create Enterprise, 717 on the board, up almost 180%. 13.4 million shares traded. Relative volume 46 times normal, and the float is only about 1.1 million. That's a huge turnover to float mismatch. So the read is simple. If buyers keep reclaiming the low sevens and it can actually hold above 720, that tells me the bid is still showing up. If it keeps wicking into that area and immediately backing off, that's not clean momentum, that's chase risk. Tiny market cap, tiny float, monster volume. Fun chart to watch, but it can rug fast. I'm logging 720 as the prove it line here at the Markets Desk. YYGH next? Okay, this one's cleaner to frame than CRE because the level is obvious. Board price is 205, up about 78%, and it's already done 44 million shares. So everybody's staring at that $2 area. If buyers keep defending 2, that tells you the move still has hands underneath it. If it starts living back below 2, that's where these pre-market runners can get sloppy really fast. And don't ignore the backdrop here. Float's just over 2 million, but the dilution risk tag is high. So I'm not treating this like some clean long-term story. This is tape volume level. $2 is the line I care about right now. Now, PSNYW. And yeah, slightly different animal here because this is warrant-style liquidity, so the tape can get weird. 580 on the board, up 55%, only about 2.3 million shares traded, but that relative volume is 32 times normal. That's the whole story. It doesn't need massive absolute volume to move if the usual volume is tiny. So I'm watching whether this keeps accepting above that 550 to 580 zone, or whether it starts throwing upper wicks and fading back through the prior push. If it's squeeze continuation, you'll see dips get bought fast. If it's a fade setup, the rallies will start failing almost immediately. SOAR next. Volato private aviation name, and this is the sub-dollar one on the board. 23 cents, up about 49%, and the eye popper is the volume. 72 million shares, roughly 47 times normal. So yeah, there's action here, but the quality of that bid matters way more than the headline percent move. I'm watching that low 20 cent area, call it around 22 cents. Because if this thing keeps soaking there and doesn't immediately roll back through it, then at least the tape has some structure. But if it loses that area, that's where these 20-cent runners can go from fun to ugly really fast. Medium dilution risk tag here too, so I'm not treating this like a clean blue sky momentum name. This is still a cheap aviation runner with a ton of shares changing hands. DAIC now, and this is a totally different kind of risk profile. 571 on the board, up 47%. But look at the float, about 419,000 shares. That is tiny. Shell company category, high dilution risk tag. And when you get a micro float like this, the candles can look amazing for 2 minutes, and then one seller prints through the book, and you're staring at a wick. So for DAIC, I care less about the percent gain and more about whether the 1 minute is building controlled higher lows or just throwing thin spikes. If it's all wick and no base, that's not clean momentum. That's liquidity risk wearing a green shirt. All right, SMTK versus RDIB here. This is a fun compare because both are tiny float movers, but the stories are totally different. SMTK is your tech/semiconductor angle, SmartChem, 468 on the board, up 26%, about 3 million shares traded, and that's nearly 24 times relative volume. Float listed around 388,000 shares, so yeah, this can move fast. But dilution risk is marked high, so I don't want to pretend this is clean just because it says semiconductors. On the chart, I'd want this holding the 450 area if buyers are real, and $5 is the obvious psychological test above. Now flip to RDIB, Reading International, entertainment and real estate assets way thinner normal liquidity. This thing is only up 28%, but look at the relative volume, 837 times. That's not normal action. Float around 299,000. Average volume basically nothing at 4,300 shares, and today it's doing 3.6 million. So RDIB is the more explosive tape, but also the easier one to trap traders if spreads open up. SMTK has the cleaner theme. RDIB has the crazier liquidity event. Quick loser side sweep before we reset the board. GRML first, 549, down 43%. And the weird part is, the relative volume is only 0.44, so this isn't the same kind of full market frenzy as the gainers. It's red, it's ugly, but I'm watching whether it can even reclaim that 550 area and build above it, because if it can't, it's still just living below the breakdown. NCPL next, 42.5 cents, down almost 27%. Financial capital markets name, high dilution risk. And this one is sub-dollar, so the risk profile is totally different. Volume's 2.4 million, but relative volume is 0.4. So again, not a panic volume flush compared with its own average. For NCPL, that 50-cent line is the clean psychological reclaim. Below that, it's still damaged tape. All right, let's pop the movers board back up. Big takeaway from this blitz. Indexes are basically flat. VIX is asleep, but the small cap board is absolutely not asleep. CRE, YYGH, SOAR, RDIB, insane relative volume all over the place.
Thanks, Markets Desk. Let's connect the easier oil tape to the AI semi-trade. Oil cooling off takes one macro pressure point off the board, sure, but look at the equity tape. SPY basically flat. QQQ down 0.25%. VIX barely moving. So here at the company desk, the question is pretty simple. If risk isn't exactly screaming higher, are the AI semis still getting a bid because the business story is strong enough? NVDA is the first check. Now the NVIDIA story flow is busy. We've got the Jetson Orin Nano 2 robotics computer. Twice the inference performance versus the prior version, with lower power at the same performance. We've got Cisco expanding secure AI factory architecture with NVIDIA. And we've got a SuperX order tied to NVIDIA B300 GPU-based server clusters, about $38.8 million. Important distinction, for a $5 trillion plus NVIDIA, that order by itself is not the reason the stock moves. That's not the point. The point is the pattern. Edge AI, rack scale infrastructure, international AI server demand. The market is asking whether AI demand is still broadening or whether it's all just one crowded mega cap trade. Back to the chart, because the story only matters if the tape confirms it. NVDA is around 212.87 on our feed, basically unchanged to a little red.
That's actually kind of interesting, with QQQ weaker. The level I'd watch on this pre-market tape is 213. Not magic, just that round acceptance area right above where it's trading. If NVDA can reclaim and hold above 213 while QQQ is still soft, that's a relative strength tell. On the downside, 212 is the quick bid quality check. Lose that cleanly, and it tells you buyers are stepping back ahead of the event risk. Now rotate it to AVGO. This is the cleaner infrastructure read-through name for me. Networking, custom silicon, the plumbing side of AI build-out. We don't have a fresh AVGO-specific catalyst in this packet, so I'm not going to force one. This is a relative strength check. If NVIDIA is the event magnet and AVGO is still firm against a softer NASDAQ tape, that says the market is paying for the broader AI infrastructure chain. If AVGO fades while NVDA holds, that's a narrower, more cautious message. MRVL is the higher beta version of that same question. Marvel is where traders look for networking and custom silicon sympathy. But it can also tell you when the group is thinning out. So the company desk read is, does the AI CapEx story spread beyond NVIDIA? Or is the market only willing to own the leader? If MRVL joins the bid, the theme has breadth. If it lags while NVDA sits fine, that's not automatically bearish. It just says investors are being selective, and selectivity matters into a macro day-to-day. And then, AMD is the competitive read-through. This one is a little different. Good NVIDIA demand can lift the whole AI chip complex, but it can also remind the market how dominant NVIDIA still is. So I'm watching whether AMD trades like a sympathy name, or like investors are saying great for NVIDIA, not enough for everybody else. Bigger picture, oil being lower helps the macro mood a bit, but the semi-basket is still about earnings power, AI orders, and who actually captures the spend. Coming up, we'll flip back into the movers board and see where the fast money is hitting next.
Thanks, company desk. All right, markets desk is back on the movers board, and this is exactly why we show up early. SPY, basically flat, IWM flat, QQQ a little soft, VIX lower. But this small cap board is absolutely not flat. CRE is still the monster. 760 area, up about 196%. 16.5 million shares, 56 times relative volume, and only about a 1.1 million share float. That's float turnover tape. YYGH, 206, up 79%, almost 45 million shares. SOAR, 25-cent stock, up 64%, almost 98 million shares. PSNYW sitting just under $6, up 60%. So we're not camping on the board. We're going chart by chart, 1 minute, and checking where the real bid is. CRE first. Oof, look at the size of this move. This is the kind of 1 million float tape where the candles can look clean for 2 minutes, and then one ugly wick changes the whole personality. Current board price is around 762, and for me, the first quick line is 750. Above that, the bid still looks like it has control. If it starts accepting below 750, that's where these parabolic names can get sloppy fast. And then $8 is the obvious psychological test overhead. Everybody sees it, so I care less about the first tag of 8 and more about whether volume expands into it. If it pokes 8 on thin volume and snaps back, that's not the same as clean momentum. Here at the markets desk, that's the whole game on CRE right now. 750 underneath, 8 above, and don't ignore the wick risk. YYGH next, and this one's a different kind of crazy. We're sitting around 206, up about 79%, and it's already traded almost 45 million shares. That's not a sleepy pre-market print, that's a full-on battle. The big thing for me now is acceptance after the spike. If this thing keeps living above $2, okay, the buyers are still defending the move. If it starts cracking back under 2, and every pop gets stuffed, that's when the 79% move starts looking more like exhaustion than continuation. Also, don't ignore the setup underneath it. Tiny float, about 2.1 million, and dilution risk is marked high. So yeah, momentum is real, volume is real, but this is exactly where clean candles can turn into trap candles fast. Now, SOAR. Look at the share count on the tape here. 98 million shares traded. up about 65%, and it's still only a 25-cent stock. So this is not the same as a $5 mover. This is sub-dollar flow, and the question is the bid actually building, or are we just watching huge churn at the same quarter-dollar zone? For me, 25 cents is the line that matters psychologically. If it holds above that and the dips are shallow, buyers are still hanging around. If it loses that level and volume stays massive, that can just be distribution. Everybody trading the same range. Nobody actually taking it higher. Medium dilution risk here too, so I'm not treating the volume alone as clean strength. I want the chart to prove it. PSNYW now, and yeah, this is the Polestar-linked warrant style name, so don't treat this like you're looking at a clean mega-cap EV chart. It's sitting right under $6, up about 60%, and the volume's legit versus its own baseline, about 2.3 million traded, roughly 33 times average. But with these warrant tickers, the spread quality matters a ton. If $6 lights up and the prints are clean, okay, that's where momentum traders start paying attention. If it pokes through 6, sits there for like 2 candles, and then snaps back under, that's the failed break risk right there. So for me, the board read is simple. 6 is the line everybody sees, but I want to see whether the bid actually follows it or if it's just air above the whole number.
Thanks, Markets Desk. Breaking news brief: NVIDIA and the AI trade are right back at the center of the board. ProTerminal's newsroom is tracking muted U.S. futures as investors wait on NVIDIA's quarterly numbers and the big 12:30 macro data block. What we know, AI momentum is still the swing factor for tech sentiment, and QQQ is sitting around 709.3, down about 0.19%. So this is not a panic tape. It's more like everyone has one hand on the mouse and one hand on the coffee. What we don't know yet, the actual NVIDIA print, guidance, margin commentary, or whether the broader AI demand story gets confirmed beyond the headline chip cycle. Here at the macro desk, the read is simple. Earnings risk and data risk are sharing the steering wheel, which is usually not a smooth ride. Next headline: Goldman Sachs has shifted its Bank of Japan rate hike expectation to September after Japan's inflation data. Why it matters. Japan is not just a local rate story, it's global funding plumbing. The yen is firm around 57.65. Long bonds are a little soft, with TLT near 83.37 and IEF around 93.46. And that mix keeps duration-sensitive growth stocks on a shorter leash. No Fed prophecy from the macro desk. Don't worry, the robe is still at the cleaners. But if Japan rate timing keeps moving forward, currency and bond positioning matter a lot more than the headline equity tape suggests. And one global growth check. PDD Holdings reported Q2 revenue up 8% to RMB 112.4 billion. But net income fell 12% as Temu expansion spending weighed on profitability. That's the market's favorite little dilemma. Growth is great until the bill shows up wearing shoes. For investors, this matters because it speaks to China consumer demand, cross-border e-commerce competition, and whether companies can keep expanding without margin pressure doing the tackling. So the morning setup is pretty clean. AI earnings risk up front, global rates in the background, and consumer profit quality still under review. Coming up, the markets desk jumps back into the movers board.
Thanks, macro desk. Let's pull up SMMT for a fast 2-time-frame tape check. Daily first. This is a biotech that got wrecked from the 29 area down into the low teens, and now it's trying to build a base. The box is pretty obvious. Support has been around 12.25, and the lid has been 15.75. Live price is sitting mid-15s after an almost 9% pop, while QQQ is red about 0.3. So yeah, relative strength is real here, but the daily hasn't broken clean yet. For the markets desk, 15.75 is the prove it line above. Clear that with volume, and the base finally starts to matter. Stall under it, and it's still just range chop. Now let's drop down to the 1 minute. Oof, look at that wick into 15.60. This thing went flat around 14.30, then buyers hit it, volume confirmed the breakout, and it stretched all the way to 15.60 before pulling back. Right now it's trying to digest around 15.30, that's fine, but the tape has to keep control. The clean upside test is 15.60 first, Then that daily 1575 wall. Underneath, 15 flat is the spot I don't want to see crack if momentum is still alive. Biotech headline names can reverse hard, so one big green candle isn't the whole story. Bid quality at the level is the story. Coming up, macro report release window is on deck.
Thanks, Markets Desk. Quick macro check here, because this tape is doing that pre-data thing where every asset is trying to look relaxed, and nobody actually is. SPY sitting around 765.19, down 0.09%. QQQ's a little heavier at 708.49, down 0.31%. IWM's off 0.11%, and VIX is basically asleep at 18.65, down a hair. So that's not panic. That's a market with its hands in its pockets, waiting for the next shoe. Rates are the tell. TLT's 83.37, down 0.12%, while IEF is 93.54, up 0.03%. Long duration is not getting a clean relief bid, but the middle of the curve is holding up. Add in that $69 billion two-year auction. Bid to cover around 2.60, yield near 4.20, and the message is pretty simple. Demand for front-end paper is there, but nobody's declaring victory before the 12:30 macro dump. GDP, PCE, income, durables, profits, it's a full buffet, which is great unless you're the one washing the dishes. Now, the cleaner cross-asset story is in the safe haven unwind. Oil's down 1.05% at 124.83. Gold's down 1.03% at 423.67. And that fits the earlier theme the macro desk flagged. Less panic premium in crude, less need to hide in gold. But here's the catch. Equities are not exactly throwing a parade. QQQ's still red. SPY's flat to soft, and crypto beta is weak. BITO down 0.94% at 10.56, Coin down 1.15% at 185.01, MSTR down 1.61% at 124.79. So, the risk thermostat cooled off, but it didn't flip to beach mode. The yen matters too, sitting around 57.65, up 0.03% on this feed. With that BOJ September hike chatter in the background, even if you only trade US stocks, watch the yen when carry trades are part of the plumbing. And quick note, the dollar feed here is clearly bad, showing a zero print, so I'm not going to build a grand theory on a busted thermometer. Macro astrology is expensive enough already. Okay, and here's the actual data slate we're sitting in front of. 12:30 Eastern. We've got GDP expected at 1.1. PCE month over month expected at 0.1. Personal income at 0.2. And durable goods at 0.7. So the market's basically waiting on the growth versus inflation mix. If growth comes in firm, but inflation stays tame, that's the cleaner setup for rates to not freak out. QQQ can breathe. IWM can participate. VIX probably stays contained. If inflation is the sticky part, then you watch TLT at 83.37 because bonds start doing the talking, and that usually hits duration names first. Level-wise, SPY is boxed in. 765 support, 766.4 resistance. Super tight, no follow-through yet. QQQ is sitting right on 708.5. IWM's only down a touch. And VIX is the tell. 1865 now, 19 above is where the tape gets a little less chill. Cross asset, oil at 124.83 and gold at 423.67 are both lower. Yen's quiet at 57.65. So yeah, macro's not screaming yet, it's coiled. Let's hand it back to the movers tape and see where the actual stock-specific action is showing up.
Thanks. Macro desk. All right, markets desk is back on the movers board, and this pre-market tape is still all small cap heat. Indexes are a little heavy. QQQ down about 0.4, SPY slightly red, VIX basically flat. But look at this board. CRE still sitting on top, up 145% at 630, almost 19.1 million shares, 65 times relative volume. Then SOAR, absolute volume monster, 138 million shares at 33 cents. YYGH still up 67%, but it's now under that $2 line we were tracking earlier. So yeah, broad tape is mixed. Let's start with CRE, because oof, this is where keeping score matters. We flagged that downside 750 break earlier, and it did trigger. That's not me dunking on the stock. That's the tape telling you the first parabolic push lost control. Now it's 630, still up huge, still tiny float around 1.1 million shares, but the character changed. For me, the clean rebuild level is 675. If CRE can get back above 675 and actually hold a bid, okay, then the squeeze crowd has something to work with again. If it loses $6, that's where this can turn from controlled pullback into air pocket stuff. Tiny market cap, tiny float, huge volume, fun to watch, dangerous to force. Here at the markets desk, I want candles closing with volume, not random wig tags. SOAR is the cleaner volume monster on the board now. Not cleaner as in safe. Cleaner as in everybody can actually see the tape. Sub-dollar name, 33 cents-ish, up about 110%. And look at the share count on the session. 138 million shares already. That's 90 times relative volume. So the question is not, is there interest? Obviously there's interest. The question is bid quality. If this keeps accepting in the low 30-cent area, that's a very different look than if every pop gets stuffed and it starts leaking back toward 25 cents. For me, 25 is the danger line on this one. If that opens up, the whole pre-market chase can turn into a trap really fast. Medium dilution risk too, so you don't marry these. You read the tape, read the volume, and respect where the bid disappears. YYGH next, and this is the one where that $2 level matters because it already lost it. We talked about the $2 break earlier, and right now it's sitting just under there, around 192, still up 67%, but the personality changed a little bit once that round number gave way. Volume is real, 46 million shares, almost 20 times relative volume, and the float is tiny, at about 2.1 million, so it can still snap back hard. But there's also high dilution risk on the profile, so I don't want to pretend this is some clean institutional chart. The simple read is this: buyers need to reclaim $2 and actually hold it, not just wick through it for 30 seconds. If it can't get back over 2, then every push starts feeling more like trapped longs trying to get liquid than a fresh momentum leg. PSNYW now, and this one's a little different from the pure microfloat chaos because it's the Polestar warrant, so the spread quality matters a ton. It's up about 58%, trading around 590, and the tape already gave you that $6 rejection earlier. So I'm not chasing the headline move here, I'm watching the high fives. If the bid keeps stepping up under 580, okay, there's still demand. If it keeps poking into 6 and immediately backing off, that's your seller still sitting there. And with warrants, just be careful. The chart can look clean for 2 candles, then the spread opens up, and suddenly you're not getting the price you thought you were getting. DAIC next. This is still one of the wildest structures on the board. Price is sitting around 5.85, up 50%. 16 million shares already traded, but the float shown here is only about 419,000. That's why every move near 6 feels like it can air pocket either direction. For me, the read is super simple. Mid-5s have to stay firm, because if this loses that 5.50-ish area and volume dries up, it can unwind fast. But if it reclaims 6 with real prints, not one lonely candle, real volume, then you can get another squeeze attempt. Just remember what this is. Shell company type tape, high dilution risk, tiny float, so the level matters more than the story. RDIB is the one I don't want to skip, because this relative volume number is just silly, 855 times normal volume. Price is around 1236, up about 30%, but the real headline is the float, roughly 299,000 shares. So on the 1 minute here, I'm not just staring at the green candle and clapping. I'm asking one thing. Is the gap actually being supported, or is liquidity drying up as it pushes? $12 is the obvious line for me. If RDIB keeps holding above 12, the gap is still alive. If 12 cracks and the volume disappears, that's where these tiny float names can air pocket fast. QQQ's still red pre-market too, so the relative strength is real. But with a float this small, the spread and slippage are the whole story. Last thing, quick loser side sweep. GRML first, down 44% around 540, and the volume isn't even above normal, only about 0.6 relative volume, so I'm not forcing a bounce narrative there. For GRML, 550 is the first reclaim check. Under that, it's still just a weak red tape with high dilution risk sitting in the background. NCPL is the other one on the downside. 41-cent stock, down about 29%. And even with 2.7 million shares traded, it's still below its average volume pace. So the bounce check is simple. Can it reclaim 45 cents? Or is it stuck under 40 and still heavy? And the one extra active gainer I'll keep pinned is WVVIP. 646 times relative volume, 2.8 million shares, around 416. Normally this thing barely trades, so if that volume stays real, it stays on the radar. Alright, that's the small cap heat check. From here, let's kick it forward and get back to the next piece of the tape.
Thanks, Markets Desk. Quick news brief from the macro desk, starting with the AI and inflation double header. ProTerminal is tracking steady U.S. futures as investors wait on NVIDIA earnings and the next inflation read. That's the whole market's favorite two-button remote right now. AI demand on one side, rates on the other. Why it matters? NVIDIA isn't just one stock in this tape. It's the sentiment check for mega-cap tech, chips, data centers, the whole growth bucket. And with QQQ sitting around 708, down about 1/3%, the market is basically saying, show me the numbers first, applause later. Next headline. Traders are looking for clarity from Fed Chair Warsh at Jackson Hole. The desk is seeing real focus on the policy framework. Not just the next meeting, but how the Fed wants to balance inflation control against growth risk. For investors, that hits the bond market first and equities second. TLT is sitting right near 83.37, so even small changes in rate expectations can turn into a bigger move in duration. Macro is always polite until the bond market starts moving furniture around. Third story. Oil prices dropped more than 3% as the market looked through fresh U.S. sanctions on Iran. That's the important part. The headline sounds geopolitical, but the price action says traders are more focused on supply availability and alternative flows. Why it matters. Lower oil can ease input cost pressure for transports, consumer names, and some manufacturers. But it can also squeeze the margin story for energy producers like Exxon and Chevron. Oil-linked assets are already softer this morning, with the oil proxy around 124.83. Over in Europe, ECB policymaker Schnabel signaled more rate increases may still be needed. That keeps the global rate story alive, even if U.S. futures are trying to act bored before coffee. The investor takeaway is pretty simple. If Europe keeps leaning tighter, European bonds and equity can stay under pressure, and it can feed back into global risk appetite. EZU is the ETF to keep on the radar for that European equity read. But the bigger story is the same old macro math. Higher discount rates make every growth story work a little harder. And last one for this brief. Canada enacted retaliatory tariffs on $20 billion of U.S. goods. That's not just a political headline. It can matter for supply chains, pricing, and margins in sectors with heavy North American exposure, including tech hardware and energy. Names like Apple, Microsoft, Exxon, and Chevron are in the related basket here, but the market impact depends on where costs actually land. So here at the macro desk, the read is, tariffs are a slow burn margin story, not always an instant chart candle. Coming up, we kick it back to the movers board and see where the fast money is hiding. Breaking from the macro desk. The ECB is now set to raise rates in September, but the important second half of that sentence is, they're signaling very little appetite for more tightening after that. Here's what we know. Policymakers are looking at taking the deposit rate from 2.25% to 2.50%, with inflation pressure tied to the Iran conflict part of the backdrop. Here's what we do not know yet. The final vote count, the exact language, and whether markets treat this as a one-and-done hike or as the ECB keeping the door cracked open. Market read, this is tighter money for Europe, yes, but not a full hiking campaign unless the data forces it. So Eurozone yields matter, rate-sensitive equities matter, and the euro reaction matters. Classic central bank meal. One hike, no dessert menu. Next headline. Bitcoin breaks above $80,000 for the first time in more than 3 months. The desk is seeing the move tied to a weaker US dollar backdrop and aggressive treasury bond buybacks. So this is not just a crypto-only story. It's a macro liquidity story wearing a hoodie. Why it matters? That 80K line is the psychological headline level. And when Bitcoin clears a big round number, the sympathy check usually turns to crypto-linked equities and ETFs. But obvious caveat from the macro desk, crypto is highly volatile and unregulated, and a clean headline breakout can still trade like a shopping cart with one bad wheel. And the US setup. Stock index futures are little changed while the market waits on Nvidia earnings and the next inflation data. That's the whole equity tape in one sentence. AI optimism on one side, rates and inflation risk on the other. SPY is sitting around 765, QQQ around 708, and the VIX is basically parked near 18.7. So this is not panic. It's more like everyone standing in the doorway, waiting to see which alarm goes off first. Nvidia matters because it's still the AI bellwether, but the actual print, guide, and demand commentary are not out yet. Coming up after this, we've got a quick pro terminal tour, so you'll see exactly where these wires, charts, and data pages are coming from.
Thanks, macro desk. All right, markets desk back on the movers board. Look at the separation here. QQQ's down about a third, SPY's just red, and this board is still pure small cap chaos. CRE is the top print at 635, up 147%, 20 million shares, almost 70 times normal volume. SOAR next, 26 cents, 176 million shares. Yeah, that's real tape, but it's still a penny name tape, so bid quality matters more than the green number. YYGH is sitting under that $2 reclaim. DAIC just gave us that $6 scoreboard hit. VCIG is sneaking into the top 5. PSNYW is slipping around the high 5s. We're not camping on the table, though. I want candles. CRE on the 1 minute now. This is the top gainer, but I'm treating it like a liquidity product, not a normal sleepy chart. Price is 635. Volume's 20.3 million against about a 1.1 million share float. Oof, that is a ton of float rotation before the bell. The map is clean. That $6 air pocket line is already on our scoreboard, so buyers do not want this thing living back under there. Fresh test for momentum is 650. If the bid can stack over 650 and not instantly reject, then the chase is still trying to hold together. If it can't, don't get hypnotized by the 147% move. With a float this small, one ugly 1 minute candle can change the whole personality fast. Here at the markets desk, big percent only matters if the next pullback holds volume. SOAR next, and this is the one where I'm watching the quarter like a magnet. We're at about 25.8 cents, up roughly 65%, and the volume is just wild. 176.9 million shares, over 115 times normal volume. So yeah, there's a bid here, but on these penny tapes, bid quality matters more than the headline percent move. If the chart keeps defending that 25-cent zone, then shorts can get squeezed into those little air pockets above. If it starts accepting under a quarter, totally different feel. Then it's not momentum, it's churn. Medium dilution risk here too, so I'm not treating this like a clean institutional breakout. This is a liquidity fight around a psychological level. Now, YYGH, and this one's cleaner to frame because the $2 reclaim failed. Price is sitting around 1.87, still up 62%, but you can see the difference. Low float, about 2.1 million shares, high dilution risk, and the volume's real but not SOAR level insane. 47.7 million, about 20 times normal. So the question on this tape is simple. Can buyers rebuild in the high ones, or did that failed push through $2 just trap the late momentum crowd? For me, 2 is the big scoreboard line. Above 2, sentiment changes fast. Under it, you want to see whether dips hold around the upper 1.70s, low 1.80s, because if those bids thin out, these low float names can give back candles brutally quick. DIC now, and yeah, scoreboard check, that $6 level we had flagged just got tagged. So the question changes. It's not can it get through 6? It did. Now it's can 6 actually hold, or was that just the liquidity trap? Price is around 6.12, up about 58%, but look at the profile here. 419,000 share float, shell company bucket, high dilution tag. That is exactly the kind of name where candles can look amazing for 30 seconds and then just air pocket. So for me, 6 is the whole read. If it keeps accepting above 6, shorts stay uncomfortable. If it snaps back under 6, that reclaim turns into a failed breakout pretty fast. VCIG next. Fresh top 5 mover. But I want to be a little more picky with this one. It's up 55%, sitting around 4.41. And yeah, the float is tiny too, about 618,000 shares, so it can absolutely move. But compare the volume quality to CRE, SOAR, even YYGH. This is 6.2 million shares, relative volume about 1.4, not the monster 100 times type tape we just saw. Plus, recent filings are on the board, and dilution risk is marked high. So I'm watching 4.50 above as the clean momentum test. If it can't chew through that area with real volume, this is more of a thin float pop and a leader quality runner. LGCL now, and I'm going to slow the hype down immediately because this is the dangerous part of the board. This is a 5.7 cent stock. Not 57 cents, 5.7 cents. And anything under 10 cents can get delisted at any time. It's not something I'd recommend for day trading. That said, the tape is insane. 583 million shares traded. Relative volume over 2,000 times normal. So yeah, it's active. But this is exactly where traders get chopped up chasing candles. On the 1 minute, the clean read is simple. If it can actually build above 6 cents, then maybe the momentum crowd stays involved. If it slips back under 5 cents, that's where the trapdoor risk gets real fast. Tiny price, massive volume, high dilution risk. Treat this like a pure momentum product, not a normal equity read. Final sweep here, before we hand it off. Loser side first. GRML is down 44%. So I'm not interested in the headline bounce unless it can reclaim that 550 area and actually hold it. Otherwise, it's just a red name bounce inside a broken tape. NCPL, same idea, but smaller price, down about 28% at 41 cents. For me, the reclaim check is 45 cents. Under 40, it gets slippery again. Then scoreboard follow-up on the active gainers. RDIB is still wild, 1235, up 30%, huge relative volume on a tiny float. So 12 is the line I don't want to see give back if that momentum is real. PSNYW is still hanging near 575, up 54%, and $6 is the clean upside scoreboard level if buyers keep pressing. All right, movers board is set. Let's pivot back to the broader tape and see what's actually confirming.
All right. Quick pro terminal pit stop while the pre-market tape is still jumping. This is the board the market's desk has been living on all morning. Top gainers, losers, price, percent move, relative volume, the whole heat check. Not a buy signal, never that. It's the starting line. Who's moving, how hard, and is the volume actually weird enough to care about? That's the workflow. Now this page right here, Dilution Center, this is the stuff that keeps you from getting blindsided. Especially on small caps. Shelves, ATMs, offerings, warrants, all that supply risk that can hit a chart right when it looks clean. Off. And that matters in pre-market. Because the candle can look great, but if the cap table is a mess, you want to know before you start drawing fantasy breakout lines. Here's a real example workflow. Pull up the profile, hit filings, then insider activity. I'm using LGCL just because it's on the board right now. But say it loud, this is a 5-cent stock, under 10 cents, and anything down here can get delisted at any moment. Not something I'd recommend for day trading. It's a research example. The point is, before you chase a headline percent move, you can check what the company has filed, whether there's recent financing risk, and whether insiders are doing anything notable. Data can be incomplete or delayed around these tiny names, so it's context, not certainty.
Thanks, Markets Desk. Quick top-of-the-hour market minute for everybody just jumping in. It is 9:01 a.m. Eastern, Wednesday morning, and the tape is a little heavy, not dramatic. SPY is 764.8, down 0.15%. QQQ is the weak sibling at 707.8, down 0.42%. IWM's off 0.25% at 298.5, and the VIX is basically doing that fake alert thing at 18.69, up just 0.11%. So yeah, not panic. More like the market has one hand on the door and one eye on the calendar. Breadth is mixed, which tells you this isn't a full risk-off flush. It's more selective, more pre-data positioning, and NASDAQ is wearing the ankle weights this morning. The big driver today is that 12:30 data pileup. Q2 GDP expected at 1.1%. Durable goods expected up 0.7%. PCE price index month over month expected at 0.1%. And personal income expected at 0.2%. That's a lot of macro vegetables on one plate. Cross-asset-wise, bonds aren't really helping growth stocks. TLT is 83.28, down 0.23%. IEF is 93.35, down 0.17%. So rates are still leaning on the long-duration side of the market. Gold is softer too. GLD 424.23, down 0.9%. And USO is 124.77, down 1.09%. So we're not seeing a clean inflation scare trade. More like risk is getting trimmed before the numbers. Crypto proxies are soft as well. BITO down 0.75%, Coin down 1.75%, MSTR down 1.55%. What I'm watching here at the macro desk, SPY 765 as the reclaim line, QQQ 707.4 as the lower end support zone, VIX 19 if fear actually wants to wake up, and then that 12:30 data block. Coming up, we've got another market mover scan and an earnings spotlight, so we'll keep tying the single name chaos back to the bigger map.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And yeah, this board is loud again. SPY's a little red, QQQ's down about 0.4, IWM's soft, VIX barely green, so the broad tape is not exactly giving you a free tailwind. But look at the pockets here. CRE still top of the board, up about 135% on almost 22 million shares, 75 times relative volume. YYGH, nearly 74%, SOAR up 65% with ridiculous share turnover. DAIC, PSNYW, VCIG, all still green. This is not an index move, this is pre-market liquidity hunting. So I'm not chasing the percent column, I'm checking where the bid actually holds on the 1 minute. First one up is CRE. This is the scoreboard name right now. Tiny float, about 1.1 million shares. Market cap just over 10 million. and it's already traded almost 22 million shares pre-market. That's the whole story. Float rotation, not sleepy accumulation. Earlier, we got that push through the upside trigger, and now the board price is back around 604. So for me, the line is super clean. $6 is the keep it alive spot. Above 6, buyers can still argue this is basing after the spike. Below 6, oof. Then that earlier push starts looking like a rug pull candle, not clean continuation. I'm logging that one. CRE below 6 is the fade warning line here at the market's desk. YYGH is the next one, and this is basically sitting right on the $2 magnet. Price is 1.9987, so yeah, you don't need to overcomplicate this chart. $2 is the whole fight. Up about 74%, 48 million shares traded, relative volume a little over 20 times normal, and the float's just over 2 million shares. So, if this 1 minute can reclaim 2 and actually hold it, that's the clean psychological line for momentum traders. If it keeps rejecting right there, then it's just churn under a big round number. And the background matters here. Dilution data is on, risk is tagged high. So I'm not treating this like some clean fundamental story. This is tape, volume, and whether $2 becomes support instead of resistance. Now, SOAR. Totally different kind of tape. This is a $0.25 liquidity check. We're at about 25.9 cents, up 65%. But look at the volume, 195 million shares. That's not a cute little pop. That's the entire tape getting passed around all morning. The line I care about is 25 cents. Above it, you want to see real bid support. Candles holding, dips getting bought, volume not just exploding on red candles. Below it, this can turn into pure churn, where everyone's flipping the same shares back and forth, and the move starts bleeding. Float's bigger here, around 27.5 million. Dilution risk tagged medium, so it's more liquid than the tiny float names. But that also means you need cleaner follow-through. Quarter holds, it's still alive. Quarter fails, the character changes quick. DAIC next, and this one is where you've got to be really honest about the line. Price is basically parked right under 6, 595-ish, up 53%. But the float is tiny, only about 419,000 shares. So yeah, it can move, but it can also snap back insanely fast. We flagged that $6 open area earlier, and right now this is the whole read. Reclaim 6 and actually hold it, okay? Then the breakout attempt is still alive. Keep failing at 6 though, and this starts looking more like a failed breakout trap than clean momentum. Also, shell company label, high dilution risk on the board. That doesn't mean it can't run intraday. It just means volume quality matters way more than the headline percent gain. Now PSNYW, different animal here. This is Polestar's warrant style tape, so don't read it exactly like a normal common stock chart. It's at about 568, up 52%, and the volume is actually meaningful for this thing. 2.3 million shares versus about 70,000 average, so that relative volume is huge. The question is whether it holds above that prior hit zone, or whether it starts bleeding back into the mid-5s. For me, 550 is the quick gut check area on this chart. Stay above that, and the momentum still has some structure. Lose it, and you can see how fast these warrant names can air pocket. VCIG now, and this is the one I want measured against that 450 area we flagged. It's trading around 420, up about 48%. Volume's over 13 million shares, and the float is tiny, just over 600,000 shares. So yeah, it can move. But the read is super clean. If it can't reclaim 450 with real volume, I don't want to pretend it's stronger than it is. Under that, it's still a bounce fighting overhead supply. And the other piece here, recent filings, dilution data, high risk tag, that changes how you watch the tape. On VCIG, volume quality is the whole story. A week into 450 and a rug pull is totally different than candles holding above it and building. So for me, 450 is the scoreboard level, not the current price. Quick sweep before we hand it forward. GRML on the loser side, down 44%. This is not a strength chart. This is a reclaim check. Around 550 is the first line where it stops looking like just another lower bounce attempt. NCPL, same idea but cheaper and messier. 40 cents is the line. It's barely over it right now, down 30%, and if that cracks again, the bounce gets pretty suspect. MSS is the spicy one on the watch list. 191, up 29%, but the float is basically nothing, about 70,000 shares, so that can move fast in both directions. $2 is the obvious psychological check there, but with a float that small and high dilution risk, you respect the trap risk. And LGCL, we're not doing the full breakdown right here because that dedicated deep dive is coming up, but just know the headline. This is a 5 to 6 cent stock, massive volume, and anything under 10 cents can get delisted at any moment. Not something I'd recommend for day trading. We'll unpack the risk properly next. All right, Movers Board is hot. Let's kick it over to that LGCL deep dive and get into the real story there.
Thanks, Markets Desk. Quick earnings spotlight here on PRTC, PureTech Health. Calendar has this one reporting today, time not listed. And the estimate on the board is a loss of $1.16 a share. Stocks indicated around $17.42, up about 2%. So it's green, while QQQ is down about 0.4. A little relative strength, yeah. But volume is only about 6,700 shares, versus an average around 2,500. So I'm not treating this like some high-conviction earnings tape yet. Also, no clean 1-minute candle data is coming back right now. So I'm not going to fake a VWAP read. This is a company story setup more than a chart setup.
Thanks, Markets Desk. Breaking macro wire here. Markets are rallying as the Iran sanctions read-through is proving more muted than feared. ProTerminal's newsroom is tracking global equities higher, with tech strength and falling yields doing the heavy lifting, while easing oil prices are taking some of the geopolitical risk premium out of the tape. What we know? The market is treating the sanctions as less disruptive for now. Borrowing cost pressure is easing at the margin, and risk appetite is getting a bid. What we don't know yet, whether this diplomatic calm actually sticks, or if energy supply risk snaps back into the conversation. So the market read is pretty clean. When oil cools and yields stop yelling, equities don't need a second invitation. The S&P is still only around 764.6 on our tape. QQQ around 7707.5, and softer, so it's not a victory lap yet. More like the market taking one careful step out from behind the blast shield. Next headline, oil is down more than 4% as investors shrug off the new U.S. sanctions on Iran. The fact pattern is straightforward. Crude hit a one-week low, with traders leaning into optimism around diplomatic progress, even with the sanctions headline on the screen. Why it matters? Energy is the macro thermostat. Lower crude can cool inflation expectations, relieve some pressure on consumers, and change the earnings math for anything with fuel or input cost exposure. On our cross-asset board, the oil read is still lower, around 124.77, off about 1.1%. So the direction lines up even if every instrument marks it differently. And yeah, oil remains the one asset class that can turn a quiet macro morning into a group project nobody asked for. Third story. And this is the counterweight. 4 Federal Reserve Bank boards wanted a rate hike ahead of the July meeting. That does not mean the Fed had a consensus to hike, and we're not going to turn one set of minutes into a crystal ball. Bad habit, expensive habit. But it does tell you there is still hawkish pressure inside the system. For investors, that keeps inflation data and Fed communication very much alive as market-moving inputs. Bonds are reflecting that tension this morning. TLT is around 83.28, down 0.23%. So yields are not giving equities a full green light. Here at the macro desk, that's the blend. Geopolitics a little calmer, oil lower, but the Fed's still standing in the doorway checking IDs. Coming up, we'll kick it back toward the movers board and see which single names are actually acting like they believe this rally.
Thanks. Company desk. All right, Markets Desk is back on the movers board, and the tape is still kinda heavy. SPY down a hair, QQQ off almost 0.5%, IWM red, VIX quiet under 19. So if a small cap is green right now, it better be doing it with real volume, not just a cute headline pop. Top of the board is still CRE, SOAR, YYGH, DAIC, PSNYW. All board names, all momentum names, but the job here is simple. Chart first, scoreboard second. No victory laps until the 1 minute confirms it. CRE up first. And yeah, this is still the cleanest scoreboard name on the board. $6.26, up 143%. 22.6 million shares already traded. 77 times relative volume. That is not normal tape. Tiny float too, about 1.1 million, so every candle can get stupid fast. The earlier pop through 675 already hit, but now I care way more about the downside line, $6. If CRE starts living below 6, that's the fade warning zone again. If it keeps reclaiming that area and the offers stay thin, then the momentum crowd is still in the room. But with QQQ red behind it, I'm not chasing the green candle emotionally here. I'm watching whether 6 holds or cracks. Now SOAR. This is the one where the tape is loud, even if the chart gets a little ugly. 27 cents area, up about 71%. But the real headline is 202 million shares already. That's not a typo, and 132 times relative volume. So on the 1 minute, I'm not treating every green candle like clean continuation. I want to see whether buyers keep defending that $0.25 area, because 25 cents is the gut check here. Above it, fine, the churn can keep recycling. But if this starts living below 25, that's where a lot of these penny stock momentum names can flip from breakout to baggy really fast. Medium dilution risk in the background too, so yeah, big volume, big move, but you've got to respect how much supply can show up in names like this. YYGH next. And this one's a totally different feel because it's sitting right around that $2 psychological line. You've got 49 million shares traded, about 21 times relative volume, and the float listed around 2.1 million, so when liquidity hits this, it can move in chunks. The spot is simple. Can it reclaim 2 and actually hold 2, or is $2 just the place where sellers keep leaning on it? Price right now was showing just under that, around $1.96. So this is that classic small cap line in the sand, and I do want to keep the risk attached to the story. Dilution risk is marked high here. That doesn't mean the chart can't work intraday. It just means if the candles start getting heavy under 2, don't be shocked when the character changes fast. DAIC now. This is the follow-up I wanted, because $6 is the whole story here. You've got it printed right at $6, up about 55%, but the question is, did that prior push through 6 actually stick, or are we watching failed breakout tape? Volume's real, 17.6 million shares, but this float is tiny, roughly 419,000 shares, so the candles can get jumpy fast. For me, above 6 and building, okay, that's stabilization. Under 6 and rejecting again, that starts to look like buyers got trapped on the breakout attempt. And with high dilution risk on the profile, I'm not treating this like a clean quality move. I'm treating it like a level-to-level tape. PSNYW next. And yeah, this one trades more like warrant-style momentum, thinner, spikier, and you've got to respect the liquidity pockets. It's in the mid-5s now, 569 on the board, up about 52%, and the relative volume is the eye-opener, 33 times normal on just over 2.3 million shares. The gut check level for me is still that 550 area. If pressure keeps showing up above 550, that's constructive for the intraday tape. If it loses that and starts snapping back through the mid-5s, that's where these things can turn into air pockets really quickly. Not a chasey name for me. More of a, is the bid actually there? RDIB now. And this one's sneaky because it's not up 140 like CRE, but the volume profile is wild. 1243-ish, up about 31%, but relative volume is 865 times normal. That's not a typo. Average volume is basically 4,000 shares, and today it's already pushing 3.8 million. Float's tiny too, under 300,000, so on the 1 minute I'm treating this like an air pocket chart until it proves otherwise. If it's holding above 12 and building higher lows, okay, that's at least orderly. If it starts losing 12 and the candles get wide, that's where these tiny float names can just vacuum lower. So RDIB, impressive volume, real attention, but the spread and float make it a respect the levels name, not a chill trend read. And I'm going to bridge us into LGCL, because this is the wild card on the whole board. 5.77 cents. So yes, this is a sub-dime stock, basically a 6-cent stock, and anything under 10 cents can get delisted at any time. It's not something I'd recommend for day trading. We're looking at it because the tape is ridiculous. 593 million shares traded. Relative volume over 2,300 times normal. Float just over a million, and the dilution risk tag is high. So the setup tease is simple. 6 cents is the obvious battleground, but the real question is whether this is genuine accumulation or just a liquidity trap with shares flying around. We're not going to overdo it here, because we've got a dedicated LGCL deep dive coming up next. Charts, dilution, the whole thing. But for the Movers Blitz, that's the headline. Monster volume, subdime risk, and 6 cents is where the crowd is staring. All right, let's hit the Movers board. Markets Desk speed round, no wasted clicks. SPY is a touch red, QQQ's heavier, IWM's red too. So these green names are doing their own thing. CRE is still the monster at the top, up about 145%, 22.8 million shares, 78 times relative volume. That's not a normal open. SOAR right behind it, 72%, 205 million shares traded. Oof, that's a tape. YYGH, DAIC, PSNYW, all still stacked in the middle of the board. And I'm also clocking RDIB down the list because the percent gain is smaller, but 866 relative volume with a tiny float? Yeah, that can't be ignored. We're not doing a static leaderboard here. CRE first. Pull the 1 minute, because this is where the truth is. This is a $10.5 million market cap name. Float just over 1.1 million, and it's already traded more than 22 million shares. So yeah, huge move, but also tiny float violence. The old scoreboard line here is $6. As long as CRE is holding above 6, the bid hasn't fully lost control. If it cracks back below 6, that's the fade warning line we already had on the board. Upside, I want to see it chew through 650, not just wick it and reject. Big difference. A clean push above 650 says buyers are still leaning. A nasty upper wick there says late momentum's getting stuffed. Watch the candles, not just the percent gain. SOAR next. And yeah, this is the one where that 25-cent level mattered. We got the hit, now the question is simple. Does the quarter actually hold, or was that just the first liquidity pocket before it grinds back down? Stock's around 27 cents, up about 72%, and the volume is just ridiculous. 205 million shares, 134 times normal. So the tape is real, the attention is real. But this is still a sub-dollar aviation name with medium dilution risk on the board, so I'm not treating every green candle like it's clean. For me, quarter hold is the gut check. Above 25, it can keep trying toward 30 cents. If it starts losing 25 and can't reclaim, that's where these can turn from momentum into bag holder theater really fast.
Thanks, Markets Desk. All right, macro countdown into the open, and the bell is close enough now that everybody's pretending they're calm. The tape is not a disaster, but it's definitely not doing cartwheels. SPY sitting around 764.79, down 0.15%. QQQ at 707.92, down 0.39%. IWM down 0.23%. And VIX basically just blinking at us, 18.70, up 0.16%. So that's the setup. Mild red, mixed breadth, no panic bid in volatility. The why matters here. Bonds are a little soft. TLT 83.21, down 0.31%. IEF 93.35, down 0.17%. So the rate-sensitive side of the market has a bit of sand in the gears. Dollar proxy is firmer at 28, up 0.21%. And that helps explain why gold's getting leaned on. GLD 422.70, down 1.25%. Oil's softer too. USO 125.81, down 0.27%. So the geopolitical panic premium is still bleeding out a little. That's good for inflation optics, not automatically good for growth stocks if yields stay sticky. First NASDAQ lines for the open. I'm watching QQQ 707.50 below as the quick support gut check, and 710.47 above as the high it needs to reclaim if buyers actually mean it. Here's the big picture into 9:30. Today is basically a tug of war between cheaper oil on one side and firmer rates plus a firmer dollar on the other. That's why the NASDAQ is lagging a little more than the S&P. Mega cap tech can be the mood ring for the whole session. NVDA, AAPL, NSFT, all that usual machinery. But the macro desk is also watching the stuff most equity traders ignore until it bites them. TLT around 83.20, the dollar staying bid, and VIX near 19. If TLT bleeds below 83.20, that keeps the rate pressure conversation alive. If VIX punches above 19, then this quiet pre-market tape gets less quiet in a hurry. Crypto is not exactly confirming a big risk on party either. BITO 1055 down 1.03%. Coin 183.10 down 2.17%. MSTR 123.97 down 2.25%. Confetti cannon remains in storage. And then later today, 12:30 Eastern is the macro speed bump. Q2 GDP estimate 1.1%. PCE price index month-over-month estimate 0.1%. Personal income estimate 0.2%. Durable goods estimate 0.7%. At the open, though, we'll get the real vote first. CRE up 143%, YYGH up nearly 68%, SOAR up 67%, VNRX up 60%. Those pre-market movers need regular hours liquidity to prove the move isn't just a very expensive game of musical chairs. Bell's right there. LGCL deep dive is coming up after this first rush settles. But for now, the cross-asset traffic light is amber.
Thanks, Macro Desk. LGCL Deep Dive. Let's get this one on the chart. And right away, big warning before anybody gets cute with it. This is a 5.5-cent stock. Anything under 10 cents can get delisted at any moment, and it's not something I'd recommend for day trading. We can still read the tape though. Market's mixed, QQQ's soft, and LGCL is still up about 27%. So yeah, relative move is there, but the risk is loud. Okay, now look at the 1 minute. Oof, look at that early shove lower. Open was around 0.0552. Then they stuffed it down to about 0.0492 in the first push. That's not a little wiggle when the stock is only 5 cents. That's a huge percentage swing. Then the character changes. It stops making clean lower lows, starts basing around 0.052 to 0.053, and then you get the recovery push back toward 0.058, almost 0.059. That's the part that matters here at the markets desk. Volume hit on the sell-off, then volume hit again on the reclaim attempt. So both sides are active. Right now the tape is stalling under 0.058 to 0.0585. That's the prove it zone. If LGCL can't clear 0.0585 with real prints, not just a wick, this can fade right back into the base. And below 0.052, that bounce structure starts looking tired fast. Now catalyst check. I don't see a fresh this morning press release driving this exact candle. So I'm not treating this like clean news momentum. The recent company headlines are older. June, they put out the Agentic AI patent headline tied to insurance applications. And July 2nd, they updated financing plans. So the story has AI language in it, sure, but today's tape feels more like microcap flow, float pressure, and traders chasing range than some brand new catalyst. Filings-wise, there's a July 10th 6K sitting there too. So if you're tracking this name, the filing stack matters more than the headline label. And here's the part that keeps me from getting excited about the percent move. Dilution risk is high. ProTerminal has 3 active shelves, an active equity line, 19 total offerings, about 125 million raised over the last 12 months, and up to 200 million total raisable amount flagged. Against a market cap around 2.4 million and a float around 1.08 million shares, that is a massive overhang. So the chart can absolutely pop. It can absolutely squeeze in bursts, but the supply risk is real. Back on the level map, 0.0585 is the upside check, 0.052 is the bounce failure line, and 0.0492 is the low that would be ugly if it gets tested again. Quick tease. Coming up, we're going right back to the movers board and keeping score on these levels. All right, let's hit the movers board again. Fresh pre-bell scorecard, not a rerun. QQQ's still a little heavy, SPY slightly red, bread's mixed, and yet this board is ridiculous. CRE sitting up 142, 23 million shares, 79 times normal volume. That's the loudest name on the sheet. SOAR still doing penny stock volume, 214 million shares, 140 times relative volume. YYGH is next, almost 70%, 50 million shares. And quick scorekeeping here at the markets desk. MSS just tagged that $2 flag from earlier, so that one's officially on the board. But we're not staring at percent gain. Percent gain is the headline. The 1-minute chart is the truth. CRE on the 1 minute now. This is the kind of tape where the index backdrop almost doesn't matter. QQQ is red, and this little industrial services name is up 140 plus. Price is 622, float just over 1.1 million, volume already 23 million. That's not normal interest, that's a crowd. Here's my read. After a move this stretched, I don't care about the story first, I care whether the last price battle stays orderly. 620 is the line right here. If it starts losing 620 and can't reclaim it, that tells me the chase is getting tired. If it keeps printing above there cleanly, buyers are still defending the move. But with a float this small, oof, this can air pocket fast. No hero stuff, just levels and volume.
Thanks, Markets Desk. The bell is live, and the macro desk has the wide-angle lens on this open. We're opening with a small red tint, not a panic candle. SPY 764.8, down 0.14%. QQQ 708.2, down 0.35%. IWM 298.5, down 0.23%. And VIX at 18.70, up basically a rounding error amount. Breadth is mixed, so this isn't the whole market sprinting for the bunker. It's more like mega-cap tech starts heavy, small-cap speculation still has a pulse. And the tape's deciding if this is just opening bell noise or something with teeth. First movers out of the gate, CRE is still the loudest green name, up about 136% around 6.06. YYGH up 66%. SOAR up 64%. DAIC up about 60%. PSNYW up 52%. Other side, GRML is down roughly 45%. So yeah, the indices are red, but the movers board is wearing a party hat. Weird economy, normal Wednesday. Now the important part. Why the open feels a little heavy, even though volatility isn't yelling. Bonds are soft. TLT 83.21, down 0.31%. IEF 93.35, down 0.17%. So the rate side is still leaning on growth. That already flagged TLT 83.20 area is basically under the market's shoes right now. If long bonds can't catch a bid, NASDAQ doesn't get a free lunch. That's the boring plumbing of the tape. Dollars firmer too. UUP at 28 even, up 0.21%, while yen is quiet at 57.65. Gold's getting hit. GLD 422.70, down 1.25%. And oil's softer. USO 125.81, down 0.27%. That tells you the geopolitical panic premium is bleeding out a bit. Less safe haven gold, less crude stress. But the stronger dollar and softer bonds are still the grumpy chaperones at the risk party. Crypto beta agrees. BITO down 1%, coin down 2.17%, MSTR down 2.25%. So the macro chain is pretty clean, relief in oil and gold, but rates and dollar are still keeping risk assets on a shorter leash. Okay, next macro window is pretty clear from here. We've got the 11 o'clock mortgage rate read first. That can matter for the home builder and rate-sensitive crowd. But the bigger cluster is 12:30 Eastern. GDP, income, PCE, durables, corporate profits, all hitting together. So if this open stays a little heavy but not panicky, that's the window where the tape can actually reprice. Morning radar from here. QQQ's open range is still the tell. 709.50-ish above, 707.50 below. Right now it's living closer to the lower end, so tech hasn't really reclaimed control yet. TLT near 83.20 is the bond line. UUP around 28 says the dollar is still firm. And VIX hanging near 1870 is the funny part. It's not screaming, it's just quietly elevated. So yeah, choppy open, cross assets leaning defensive. And we'll see if that 12:30 data cluster gives this market a real direction. Coming up, quick pro terminal plug. Because all these pages we're flipping through, the macro board, charts, filings, dilution, movers, That's the whole stack we're using live.
Thanks, Macro Desk. Quick Pro Terminal pit stop while the open is still messy. This is the stuff the markets desk is using live. Not magic, not a buy button, just the research stack. First stop, Dilution Center. When these tiny names start flying, I don't want VODs. I want shelves, ATMs, offerings. The stuff that can hit a chart out of nowhere. Data can be incomplete or delayed, sure, but this is where you start checking the risk instead of chasing the candle. Now jump back to the movers board. This is where the morning starts for me. CRE up huge, SOAR with ridiculous relative volume. RDIB still wild. Oof, look at that board. But the point is research context. Price, percent move, relative volume, float when it's there, market cap, sector. The board tells you where the action is. It does not tell you what to do. Then, for a name like LGCL, I want the paper trail. Filings first. Recent registrations, offering language, amendment dates. That's the stuff that changes the risk profile fast. Then, flip insider trades. Same idea. Don't overread one row. Don't turn it into a story that isn't there. But know what's been filed. That's why we keep hammering this. The chart is the action. The filings are the context. And then we're right back on the 1-minute terminal chart. This is the tape. Candles, volume, wicks, failed pushes, VWAP behavior, all of it. That's the workflow. Movers board to find it, chart to read it, filings and dilution to understand the risk. If you want the same setup we're using on the stream, it's Pro Terminal. Sign up at proterminal.io. Coming up, we're right back into the movers scan.
All right, back to the movers board. Fresh open drive scan, no fluff. Broad tape is barely red here. SPY off 6 bips. QQQ off 11. IWM a little heavier, so these single name moves are not index beta. CRE is still the scoreboard monster, up about 172% with 92 times relative volume. And yeah, that 650 line we flagged just got hit. SOAR still has stupid liquidity on the tape. YYGH is hanging near the top. And ANF is the oddball adult in the room. Actual retail stock, not just another tiny float grenade. Here at the markets desk, I'm sorting this by volume, float, and where the chase can fail. CRE first. Pull it up. Latest board snap has it around 6.99, up 171.8%, with 27 million shares traded against an average volume under 300,000. That's wild. Float shown is only about 1.1 million shares too. So this is exactly the kind of name where the 1-minute candles can look clean for 3 bars and then oof, one wick changes the whole conversation. We already got the 650 upside hit. Scoreboard counts, nice. Now the next gut check is $7. Above 7, I want to see actual acceptance, not one little drive-by print. If it's just wicking through and immediately rejecting, that's not the same thing. And that earlier 620 downside line still matters, as the trapdoor if the chase gets tired. Tiny market cap, low float, huge relative volume, fun tape to read, but not something you marry. CRE is the leader right now. SOAR next. And this is the classic penny stock liquidity explosion. We're talking 26, 27 cents, up about 70%. But the headline is the tape. 234 million shares already, roughly 153 times normal volume. That is insane liquidity for this name. Now for me, the read is pretty simple. If it's holding above that quarter area, 25 cents, and the candles keep reclaiming the mid-20s after dips, buyers are still showing up. If it keeps jamming into 28, 29, 30 cents and can't actually expand, that's where it starts looking less like clean momentum and more like churn. So watch 25 below, watch 30 cents above. Not a recommendation, just the battleground on a tape this crowded. Now YYGH, pull this one up. Different personality here. It's not sub-dollar. It's around $1.91, up 66%, and the float is only about 2.1 million shares. So the bid can look great for 5 minutes and then totally disappear if supply hits. Volume's real. 52 million shares, 22 times average, but with high dilution risk on the board, I don't want to just blindly cheer the squeeze. The quality check is Does it build higher lows above the 180 zone, or is every push toward $2 getting sold into? $2 is the obvious psychological magnet above. If it can't stay near that area, then the squeeze is fading into supply instead of holding structure. DAIC now, and this is where I want to slow the tape down just a little bit. You've got it sitting around 588, still up about 51%, but the key is that prior $6 area. That's the pivot. Above 6, if it can actually reclaim and hold there with volume, then you can talk continuation. But under 6, this can turn into one of those low float rug pull looks really fast. Float on the board is only about 419,000 shares. Volume's already over 21 million, and dilution risk is marked high. So yeah, it's moving, but this is not a clean institutional breakout. This is a tiny supply, fast tape name where one failed push through 6 can flush hard. PSNYW next. Pull up the warrant tape. This one's different. It's not the same animal as the common. These can move in these air pockets, and the board has it right at 550, up about 47%, with 2.4 million shares traded versus an average around 70,000. So the question is simple. Is 550 being defended, or did that mid-5 break actually stick? If buyers keep answering right around 550, fine, that's your line in the sand. But if it starts accepting below there and can't snap back, I don't want to pretend that's strength. That's usually where the warrant-style tape gets slippery.
Thanks, Markets Desk. Breaking macro hit here. Australia inflation runs hot in July, and markets are repricing rate hike risk around the Reserve Bank of Australia. What we know, consumer prices came in hotter than expected. The Aussie is getting a bid on that rate bet reaction, and this is landing while global markets are already touchy about the next inflation print. What we don't know yet is whether July is a one-off pop or a stickier inflation problem that forces a harder response. That part is not in the tape yet. The market read is pretty clean though. This is a rates and FX story first, not an equity panic story. SPY is only down about 3 basis points, near 765.70. QQQ down about 6, near 710.30. So yeah, hot inflation pops up in Australia, and the global bond market immediately does the little meerkat thing. Next headline. Oil prices fall more than 4% as investors shrug off new U.S. sanctions on Iran. The fact set is simple. Crude futures dropped hard, even with sanctions in the mix, because the market is discounting the supply shock risk right now. Why that matters? Lower oil takes a little pressure off inflation math, helps input cost stories for transport, retail, and consumers, but it also cools the tailwind for energy producers. Here at the macro desk, oil is usually the smoke alarm for geopolitical risk. Today, at least from this headline, the alarm is not screaming. VIX around 18.63 backs that up. Elevated, sure, but not exactly DEFCON popcorn. And third, 4 Fed bank boards wanted a rate hike, according to the July minutes. Important distinction. This is not the FOMC hiking rates. It's the regional bank board layer showing a more hawkish tilt under the hood. Why traders care? It keeps the inflation fight isn't fully done narrative alive, especially with bonds still soft on the day. TLT off about 0.29%, while tech is basically flat, with QQQ down only about 0.06%. So the message from this little news stack is, Australia says inflation is sticky. Some Fed plumbing still leaned hawkish. Oil is helping on the other side. Macro, as always, is 3 people pulling the same rope in different directions. Coming up, the markets desk gets back into the movers board. All right, macro desk is back. Let's zoom out from the penny stock fireworks and hit the inflation tape. The headline that matters here. Australia inflation ran hotter in July, and markets immediately started repricing rate hike risk over there. That's the little reminder nobody wanted before coffee. Inflation is still the dinner guest who says they're leaving, then somehow starts another story by the door. Now, U.S. equities aren't panicking, but they're not exactly throwing a parade either. SPY sitting around 765.45, down 0.06%. QQQ 709.71, down 0.14%. IWM 299.04, down 0.06%. VIX is 18.64, basically parked just under that 18.70 stress line we flagged earlier. So the read is simple. Not a sell the building tape, but the market is keeping one hand near the umbrella. Here's the chain across assets. Bonds are soft. TLT 83.225, down 0.29%. IEF 93.315, down 0.21%. So duration is not getting a clean bid. The dollar proxy is firmer at 28.01, up 0.25%, and the yen proxy is weaker at 57.565, down 0.11%. Even if you only trade US stocks, that matters, because a firmer dollar plus soft bonds is like tightening the screws on the high multiple stuff. Gold's getting hit too. GLD 423.21, down 1.14%, which tells you this isn't just pure fear. Some of the safe haven premium is bleeding out while the dollar leans on it. Oil's basically flat at 126.13, down 0.02%, so no fresh panic premium there. And crypto beta is not loving the setup. BITO down 0.7%, coin down 1.54%, NTR down 1.95%. That's the liquidity mood ring, and right now, it's not glowing neon green. Okay, US data board now. And this is why the equity tape is just kind of pinned here instead of getting that clean relief bid. GDP came in right on the number. 1.5 versus 1.5 expected, so no shock there. But the hotter pieces are the ones that matter for rate-sensitive stuff. PCE hotter than estimates. Income hotter. Durables hotter. So the read-through is pretty simple. Growth isn't falling apart. Inflation pressure isn't fully gone, and bonds are not loving it. That's the mix where the market can still hold up. But your long duration areas, high multiple tech, real estate, anything that really wants lower yields, they don't get the easy green light. Now pull SPA back up, because this is the range I care about into the next handoff. VIX is sitting right around 18.6. Call it near 18.70. Not panic, but not dead either. Dollars around 28 and firm on the day. SPY's been boxed between that 764.70 support area and the 766.40 rejection high. If 764.70 cracks, that tells you the hot data pressure is finally bleeding into equities. If 766.40 gets reclaimed with volume, then the market is basically shrugging it off. For now, flat tape, soft bonds, sticky inflation inputs, that's the macro headline. All right, let's hand it back to the movers board and see where the actual single stock heat is hiding.
Thanks, Macro Desk. Markets Desk is back on the movers board because the indexes are basically asleep and this board is not. SPY up a hair, QQQ up a hair, IWM flat, VIX still around 18.6. So if something's up 40, 80, 140% in this tape, that's isolated flow. Look at the top. CRE still the headline, up 144% on 107 times relative volume. YYGH holding the $2 area, up 75%. DAIC right at $6. PSNYW glued to that 550 battleground. And oof, RDIB 46%. But the crazy part is the 977 relative volume. That is not normal tape. We're going chart by chart. Start with CRE. This is the one that already paid the scoreboard once. We flagged 650 earlier. It tagged through. And now the question is way cleaner. Was that real acceptance or just a squeeze wick? Current prints around 628. Still up huge. 31 million shares traded against a tiny 1.1 million float. So yeah, the headline percent is loud, but the float math is why the candles can get so violent. On this 1 minute, I don't want to chase the green candle after it's already extended. I want to see if buyers can reclaim 650 and actually sit there. If it's just wicking into 650 and rolling back under, that tells you the $7 callout is still too far away for now. Clean momentum would be reclaim, hold, higher low. Messy tape is pop, reject, slam back towards 6. YYGH is next, and this one's got that classic $2 squeeze quality test written all over it. It's sitting basically right on top of $2 after trading about 56 million shares. So the question is super simple now. Is $2 support or is $2 the rejection line? Big difference. If buyers defend that area and the candles keep reclaiming it, okay, then the squeeze still has some structure. But if it starts living back under 2, that's where this can turn from momentum into just a failed pop. And with YYGH, I do want to keep the risk tag front and center. High dilution risk on the board. Small cap name, big volume flood. So yeah, we're watching the tape, not marrying the story. Alright, quick XPON deep dive. This one just lit up the board. So the markets desk is going straight to the 1 minute. Flat tape out there. SPY basically unchanged. QQQ barely red, and XPON is up around 58% on the movers board. That matters. Relative move. The chart's pretty clean too. Opened around 619, flushed to about 595. Then it stopped bleeding and built that mid-6 base. The real tell with the expansion through 640, then through 7. Oof. Look at that volume kick. That's not a sleepy grind. That's buyers stepping in late. Day high is 847, and right now it's hesitating around 830 to 840. So the line for me is simple. 840 needs real acceptance, not just a wick. If it loses 7 with heavy red volume, the momentum tone changes fast. Now catalyst check. Because with these small cap rips, you've got to know what the crowd's attaching to. XPON had 2 fresh press releases on August 24th. First, a $9 million initial closing of a private placement. Second, and this is the weirder one, XPON says it acquired assets to establish an oil and gas exploration platform. Remember, this is an industrial's name tied to lithium iron phosphate batteries and energy storage, so that oil and gas platform angle is a real story shift. But the headline is 2 days old. Today's move looks more tape-driven now. Float under 1 million shares, volume over 2 million, and once the breakout started, the chart did the talking. Risk check before anyone gets too fired up. XPON is tiny. Market cap around 6.5 million, float about 924,000 shares. That can squeeze hard, but it can unwind just as fast. Dilution page shows medium overall risk, an active equity line, 22 historical offerings, and roughly 6 months of runway. No active shelf showing here, no pending S1 showing here, but that active equity line is the part I care about on a small float. It doesn't mean the chart can't keep moving. It means overhead supply risk is part of the tradable tape. So scoreboard, 840 acceptance is the upside test. Below 7, I'd assume momentum is cooling. Coming up, we'll kick it back to the movers board and see what else is waking up.
Thanks, Markets Desk. Okay, quick macro check on the live tape. And honestly, this is one of those mornings where the index board looks boring until you look under the floorboards. SPY's basically flat at 765.87. QQQ flat at 710.64. IWM is barely green, up 0.08%. And VIX is actually down a touch at 1863. So the headline read is not panic, it's digestion. We're still sitting inside that SPY box the macro desk flagged earlier. 764.70 underneath, 766.40 above. And until one side actually wins, this is a market taking little bites, not swinging the bat. QQQ already had the classic morning fakeout, down toward the 707.41 area, then a push-up as high as 711.75, now back around 710. That's the market saying, yes, I see the macro pressure. No, I'm not ready to fall apart before coffee. Very dignified, slightly suspicious, but dignified. Here's the important part. Bonds are not giving equities a free pass. TLT's sitting around 83.23, down 0.29%. IEF down 0.21%, so the belly and long end are still leaning softer. That matters because when bonds sag, rates pressure stays in the room. And rates are basically the gravity setting for growth stocks. At the same time, the dollar proxy is up at 28.01, plus 0.25%, while the yen proxy is softer at 57.57. Even if you only trade U.S. equities, don't ignore that yen-dollar corner. It's not a side quest, it's part of the global liquidity machine. Stronger dollar, softer bonds, weaker yen, That combo usually makes gold work harder. And yep, GLD is getting hit, down 1.14% to 423.21. Oil, meanwhile, has stopped being the loudest person at the dinner table for the moment. USO is basically flat at 126.13. So today's pressure is less energy shock and more rates and dollar doing the quiet damage. Risk appetite check real quick, because this is where the tape is a little less chill than the indexes look. SPY and QQQ are basically flat. VIX is barely lower around 18.6, but crypto-linked risk is softer. BITO down about 0.7, Coin down 1.5, MSTR off almost 2%. So yeah, not a panic tape, but the speculative stuff is not exactly getting rewarded, while duration is heavy and the dollar's firm. That's the connection I care about. TLT sitting right on 83.20ish, IEF red, UUP holding 28. If yields keep leaning on the screen, the high beta names usually don't love that. For the macro desk watch list into the next hour, SPY, I'm watching 764.70 below and 766.40 above. QQQ, 711.75 is the intraday high to beat, and 707.50 is the line where that earlier base mattered. TLT, 83.20 is the bond tell, UUP at 28 is the dollar tell. And don't forget, 11 a.m. we get that mortgage rate print, so housing sensitive and rate sensitive names can wake up around that. All right, that's the macro frame. Calm index tape, not so calm plumbing underneath. Let's hand it back toward market movers and see where the actual action is hiding.
Thanks, Macro Desk. All right, Movers board is live again. Look at this board against the tape. SPY basically flat, QQQ basically flat, IWM flat, VIX slipping a touch, breadth mixed. So if something's up 50, 60, 100+% right now, that is not index help. That's pure single name liquidity. CRE still sitting on top, up about 140 with 111 times relative volume. XPON is still hot from the last read, but we're not camping there. YYGH, DAIC, SOAR, RDIB, all still stacked with crazy volume. Oof, and the loser side matters too. GRML down 46, WIDO down 33. So we're going chart by chart now. No wasted words. Levels, volume, hold or fold.
Thanks, Macro Desk. Quick stock whisperer check on the sim book. We just opened CRE long, 500 shares, average price 610. This was not a chase for fun entry. The trigger was the hold above 625 after that volume spike, with the idea that buyers had to defend the post-spike support and VWAP zone. Right now it's marked around 615, so it's green by about 26 bucks, 0.86%, but it's also back under that 625 trigger, so no victory lap here. It needs to firm back up, or this turns into a failed momentum pop pretty quickly. On the orders tab, the CRE bracket is already sitting there. Stop at 588, take profit at 725. I'm also watching 605 as the softer warning line. If CRE loses that spike base, the thesis is probably breaking before the hard stop even matters. The other open position is DKS, still short 40 from 123.305, now 122.60, up about 28 bucks. Same idea there. Buy stop risk at 132.20, take profit working down at 108. Cash in the simulated account is just under 73 grand. This is the show's paper portfolio, not a copy this signal. Here at the Stock Whisperer, thesis first, level second, risk always defined. Coming up, we'll kick it back into the pro terminal flow. All right, quick pit stop. This whole setup the markets desk is using live is pro terminal. This movers board right here is the home base. Gainers, losers, price, relative volume, float context when it's there. It's not a buy signal, it's the radar. Market's barely green, bread's mixed. And this board is where we find the weird stuff actually moving, instead of guessing from vibes. Now, this is the part I care about when a small cap starts flying. Dilution. Click into the dilution center, and boom, you're looking for shelves, ATMs, offerings, equity lines, all the stuff that can change the risk profile fast. We just used this kind of page on the last small cap run, because price alone is not enough. If a chart is ripping, but there's financing risk hanging over it, I want to know that before I start acting like the move is clean. Data can be incomplete or update as filings hit. so you still read it like a trader. Context, not certainty. For a single name check, I'll use LGCL as the example. Stock profile first, then filings. This is where the desk is looking for the fresh SEC stuff. Offerings, registration statements, 8Ks, anything that explains why the tape might be acting weird. Then, hit insider trades. Same idea. I'm not saying insiders are some magic crystal ball. Absolutely not. But if you're researching a name, you want the filings, the insider page, the news, the whole trail in one spot. Less tab chaos, more signal. Last piece, the 1-minute terminal chart. This is where the market's desk lives. Candles, volume bursts, reclaim attempts, failed breakouts, all of it. No magic button. No, hey, chase the green candle. It's a research stack for self-directed traders watching risk in real time. Everything we're flipping through, movers, charts, dilution, filings, insider trades, that's ProTerminal. If you want the same dashboard on your side, sign up at proterminal.io. All right, quick ProTerminal pit stop. This is the board the market's desk is using to keep score live. Look at the spread here. SPY's basically flat. QQQ barely green. And then on the movers board, you've got names like CRE and XPON doing completely different things. That's why I like starting here. Percent move, relative volume, price, market cap context, boom, right in front of you. Not a buy list, not a magic signal. It's the starting point for research when the tape gets weird.
Thanks, Markets Desk. All right, Macro Desk grabbing the wheel for the data read. So here's the whole picture. Stocks are green, but not exactly doing cartwheels. SPY's around 766.7, up 0.11%, QQQ up 0.12%, IWM up 0.18%, and VIX is down a touch at 18.59. That's calmish tape, not a victory parade. The data mix is the reason. We've got GDP growth sitting at 1.5%, so growth is not ripping, and core PCE is still firm around 3.3% year over year. Inflation's that dinner guest still explaining one more story at the door. Now look at bonds. TLT is 83.17, down 0.36%, IEF down 0.26%. That tells you rates are not fully buying the easy relief story. Slower growth plus sticky inflation is awkward. It's not clean risk on. It's more like the market is trying to smile while checking the exits. All right, top of the hour. Quick market minute for anyone just jumping in. It's 10:02 a.m. here on Wednesday, and the tape is doing that very professional-looking thing where it's green, but not exactly throwing a parade. SPY's at 766.73, up 0.11%. QQQ 711.56, up 0.12%. Russell's a little better. IWM 299.78, up 0.18%. VIX is 1859, down about 0.4%, so the risk thermostat is lower, but breadth is still mixed. Translation from the macro desk: indexes are calm, under the hood is messier, and single name momentum is still doing the loud karaoke in the corner. The story driving the morning is still growth versus inflation. The board has that lower GDP growth read sitting next to firm July PCE, which is basically markets being handed decaf coffee and hot sauce at the same time. Bonds are not loving it. TLT's at 83.17, down 0.36%. IEF down 0.26%. And the dollar fund just punched through that 28 line we flagged earlier, now 28.015. That matters even if you only trade stocks, because a firm dollar plus soft bonds is the ceiling fan over the whole equity room. Gold slipping too. GLD 424.46, down 0.84%. Oil's a touch firmer at 126.59, and crypto risk is lagging. BITO down 0.7%. Coin down 1.9%. MSTR down 1.84%. Coming up, we've got a market mover scan, then a sector-themed spotlight. So we'll see whether the single-name tape can keep ignoring the macro boss music.
Thanks, Macro Desk. All right, let's hit the movers board. Index tape is basically flat green, breadth is mixed, and meanwhile the top of this board is absolute chaos. CRE still sitting number 1, up about 197% on 121 times relative volume. XPON behind it, up 68% on 11 times. YYGH still hanging in that top cluster, almost 60%, big volume, dangerous tape. PSNYW is still squeezing, up 54% with 36 times relative volume. And SOAR, sub-dollar, huge print, 280 million shares traded. That's not normal. Here at the markets desk, we're going chart by chart now. Board first, then the 1 minutes. No wish casting, just levels, volume, and whether buyers are actually holding the move. CRE first, pull it up. Board quote is 764, up 197%. Volume is 35.6 million against a normal average under 300,000. That's 121 times normal. Float's about 1.1 million shares. So yeah, this is exactly the kind of tape where the candles can look clean for 30 seconds and then just air pocket. The simulated paper book had that 7.25 marker earlier. If CRE keeps accepting above that, buyers are still pressing. If it loses 7.25, that tells you the chase bid is getting sloppy. Upstairs, $8 is the clean psychological test. I want to see real volume through 8, not one lonely spike and a snapback. Relative strength is obvious with the market barely green, but this is low float momentum. It can halt, it can rug, it can overshoot both ways.
Thanks, Markets Desk. We're jumping back into the Stock Whisperer paperbook. Quick reset. This is the show's simulated portfolio, not a signal service. And the only active position on my sheet right now is DKS short, 40 shares. Entries 123.305. Mark is 128.82. So we're red about $220 on the paper P&L. CRE already did the fast mover thing earlier with that target tag, so I'm not chasing that again here. Here's the DKS read, calmly. The original idea was bearish momentum continuation. Get the breakdown, let the short work, and define the pain point above at 132.20. But the trade has not paid us. It didn't break lower cleanly. It's pressing back toward the risk zone, and the broader tape is modestly green but mixed. SPY, QQQ, IWM all a little green. VIX a little softer. That's not the kind of backdrop where I want to let a lagging short become the whole broadcast. So the thesis is no longer clean. When the setup gets messy, the Stock Whisperer cuts the mess. All right, I'm going to flatten the simulated DKS short now. This is not me flipping bullish on the name. It's just me saying the downside continuation didn't show up, and the defined risk trade is not worth defending anymore. 40 shares short, taking the paper loss, cleaning up the book. Let's close it. Okay, DKS is out on the paper blotter. That's the unglamorous part of trading, right? The idea was fine, the execution was controlled, but the price read was wrong. I'll take that all day over sitting there, hoping it rolls over. The estimated loss going in was about $220, roughly 4.5% on the position. Process grade is okay because the risk was defined. Trade grade is not great because sellers never gave us the clean push. Now, I'm not forcing a replacement trade just because we closed one. That's a big thing for this desk. NVDA stays on the watch list above 215, but only if QQQ firms with it. I don't want a solo breakout in a mixtape. If buyers reclaim 215 and actually hold it, then it becomes a real discussion. If it just tags the level and slips, that's not enough for me in this simulated account. For DKS, the only way I'd even reconsider the short idea later is if sellers regain control below 121.50. That's the continuation level now. Above that, I'm done arguing with it. And on CRE, after the target level got tagged, the only thing I care about is whether it fails back below 605. That would tell you the momentum is leaking back into the spike base. But again, no fresh CRE trade for me here. That one needs a reset, not a victory lap. So, the Stock Whisperer book is clean after the DKS close. No revenge trade, no chase, just levels and discipline. Coming up, we've got the sector-themed spotlight, and I want to see if that group move has real leadership behind it.
Let's talk. Apple releases new M6 Mac Mini. The name's actually carrying it right now. NVDA and the rest of the group. AVGO, MRVL, AMD. The headline driving it. Oil prices fall as Oman-Iran talks signal potential Strait of Hormuz reopening. I'm pulling up NVDA first to read the tape. Then we'll rotate through the others. Who's leading, who's lagging, whether the whole group's moving together. This is the theme and the price action, not a call on any of them. Let's talk Meta settles lawsuit on social media impact. The name's actually carrying it right now. NVDA and the rest of the group. AVGO, MRVL, AMD. The headline driving it, Meta settles multi-state lawsuit over social media's impact on children. I'm pulling up NVDA first to read the tape. Then we'll rotate through the others. Who's leading, who's lagging, whether the whole group's moving together. This is the theme and the price action.
Thanks, company desk. All right, markets desk is grabbing the movers board right now. Tape is basically asleep. SPY up a hair, QQQ a hair red, IWM barely green, VIX under 19. So yeah, mixed market. But this board is not mixed. CRE still sitting on top, up about 167%. XPON behind it, still a double. YYGH, PSNYW, SOAR, all loud. And then look at RDIB down the board. Not the biggest percent move, but that relative volume number is just silly. Over 1,000 times average volume. Oof, that's the kind of row where you don't just chase the headline. You pull the 1 minute and see if the bid is actually there. Let's start with CRE, because this is still the scoreboard name. Pulling the 1 minute. Price is around 686. Volume north of 40 million shares. Relative volume about 137 times normal. Float listed around 1.1 million. So yeah, tiny float behavior. Spreads, halts, nasty wicks, all of it can show up fast. Here's the thing. We had that earlier 725 line on the board, and right now CRE is not cleanly holding above it. That's not a victory lap for bulls. That's a test. If it reclaims 725 with real volume, okay, then the bounce has teeth again. If it starts losing 650 underneath, that's where the momentum crowd can get jumpy. I'm not hyping this thing. It's a low float ripper in a flat market. The level map matters more than the percentage move. XPON next. And this one's cleaner to judge because the battleground is basically right here around 11 bucks. It's up about 110%, trading around 11.10, and it's already done almost 15 million shares versus about 1 million average. So yeah, the interest is real. But here's the catch. Float is under 1 million shares, so this can move crazy fast both ways, and ProTerminal's dilution read is sitting at medium. For me, the read is simple. If buyers keep accepting this above 11, that's a way different tape than the earlier high 8s, $9 acceptance zone. If it starts losing 11 and sliding back toward that old acceptance area, then you've got to treat the breakout like it's getting tested, not just blindly chase the green candle. Now, YYGH, different personality here. This is the sub $2 bounce check, trading around $1.89, up 64%. And the volume is huge, 62 million shares, 26 times normal volume. So it's not sleepy, right? But it does have high dilution risk on the board, and that matters a lot in these cheap small cap runners. I want to see if the bounce has actual volume confirming it near this $192 pocket, or if every pop is just getting sold into. $2 is the obvious psychological line. A clean reclaim and hold above 2 looks very different than repeated wicks into that area and fades back under. With high dilution risk, I'm not giving this a free pass just because the percent move is loud. PSNYW now. And remember, this is the Polestar warrant line, not the clean common stock read, so the moves can get a little weird fast. It's around 575, up 54%, and the volume is the real headline, about 2.6 million shares versus a normal day closer to 70,000. That's a 36 times volume day. So yeah, traders found it. What I'm checking here on the 1 minute is simple. After that gap, is volume still showing up on the dips, or was it just one big opening burst and then air pockets? With warrants, I'm way more suspicious of thin liquidity. You can get a pretty candle, then a nasty spread, then the whole thing snaps back. So for me, this is a momentum read only. If it keeps building above the mid-5s, fine, it stays on the board. If volume dries up, I don't care how green the percent column looks. SOAR next. Totally different animal. This is Volato, private aviation name, trading at about 23.7 cents. So we're in penny stock land here. It's up 51%, but look at the share volume. 288 million shares. That's not a typo. Relative volume is almost 189 times normal. So the liquidity is there today, but that also means the crowd is huge. And with penny names, the exits can get ugly when everyone tries to hit the same door. The battle is really 24 to 25 cents. If it can cleanly reclaim and hold 25 cents, that tells you momentum is still pressing. If it keeps rejecting there and slips back under 24, that's where the fade crowd starts leaning on it. Medium dilution risk on the board too, so I'm not hyping this thing, just respect the tape and respect how fast sub-dollar names can unwind. RDIB next, and this one is wild in a totally different way. Pulling up the 1 minute now, reading international, 13 bucks-ish, up 37%, but the headline stat is not the percent move. It's the relative volume. Over 1,000 times average volume on a float under 300,000 shares. That is tiny. So yeah, this can move fast, but it can also trap you fast, because liquidity can disappear between candles. For me, the whole read is, does 13 actually become a real base, or is this just a thin name auction where buyers hit it once and then the bid vanishes? If it's holding above 13 with volume staying in it, that's continuation behavior. If it loses 13 and the candles start getting wide and sloppy, that's where this becomes less momentum and more liquidity trap. Last one on the clean side, ANF. This is why I like ending the scan here, because after all those micro float rockets, Abercrombie is an actual larger cap mover, 6.2 billion market cap, stock around 144, up 32% with over 3 million shares traded. Totally different tape. You're not judging this like a halt risk penny runner. You're asking if buyers are still defending the intraday trend or if it starts digesting after the big gap. And quick downside check before we hand off. Wedo, pulling it up now, down 28%, tiny float, volume is elevated but not insane. That's fade pressure. GRML next, down about 45%, also small float, and that one has high dilution risk on the board. So the bounce attempts there need a lot of caution. Alright, that's the movers scan. CRE, XPON, YYGH, RDIB were the heat, ANF is the cleaner large cap standout, and the losers are still under pressure. We'll keep the board live and hand it onward from here.
Thanks, Markets Desk. Breaking macro brief. Stocks are catching a bid as oil tumbles and bond yields ease. ProTerminal's newsroom is tracking a risk-on move led by tech, with the Nasdaq reported up 0.66% as crude sold off hard and Treasury yields softened. What we know: lower oil takes some heat out of the inflation story, and lower yields make long-duration growth names a little less allergic to the screen. What we don't know yet, whether this is a one-session relief trade or something that actually survives the next batch of earnings and macro data. Live tape right now is more muted. SPY basically flat around 766, QQQ slightly red near 710, VIX still under 19. So here at the macro desk, I'd call this relief, not a victory parade. The parade permit is still pending, apparently. Next headline: oil crashes nearly 5%, easing inflation angst. That's the clean macro transmission line today. Energy down, inflation pressure feels lighter, bonds breathe a bit, and equities try to re-rate the risk backdrop. The investor impact is broad: airlines, transports, consumers. Anyone with fuel or input cost sensitivity gets a better story when crude falls that fast. But the desk is not treating oil like it joined a monastery and found inner peace. A nearly 5% drop is helpful for inflation math, sure. But it's also a reminder that energy is still a jumpy market, especially when geopolitics are in the background. In the big single-name headline, NVIDIA snaps a 7-day skid ahead of earnings. Shares rose 2.2% in the report, and that matters because NVDA is still the emotional support animal for the AI trade. Semis, data center capex, mega cap growth, all of it tends to listen when that chart starts talking. The fact that it bounced while oil and yields were easing makes sense. Lower yields help growth multiples, and NVIDIA is basically the market's growth multiple weather vane. The caution is simple, though. Earnings are the real event, and around a name like this, volatility can move faster than the narrative. Coming up, we'll hand back toward the movers board and see whether this macro relief is actually showing up in the high beta names.
Thanks, Macro Desk. Quick small cap momentum check on AIXI. Oof, look at that break. Market's basically mixed, SPY flat, QQQ a little red, and this thing is down about 18%. So this is not strength hiding under the tape. This is downside momentum. AIXI opened around 1.12, held that 1.12 to 1.13 pocket early, then sellers cracked it. The big tell is that dump through 1.03. That was the prior base, and once it snapped, volume blew out. Day low is 94 cents, current area is about 95 to 96 cents, and the bounce is tiny so far. For the markets desk, 1.03 is the reclaim line. Below 94 cents, that's where the breakdown can get uglier fast. Now the risk check matters here, because AIXI is a true microcap, Market cap under 1 million on this feed. Float shown under 500,000 shares on the overview. So every candle can get jumpy. I don't see a fresh same-day press release in the package. The recent headlines are older Apple patent litigation updates and an ADS ratio change. So this move looks more tape and flow than clean, fresh catalyst. And here's the big caution. Dilution risk is high. Active shelf, active equity line, roughly 11.2 million raised over the last 12 months, and over 228 million listed as total raisable amount. So yeah, if it reclaims 1.03 with volume, you respect the bounce attempt. If it loses 94 cents, you respect the trap. Coming up, we'll swing back to the movers board. All right, markets desk, back on the movers board. Let's see what still has real juice. The tape is basically asleep. SPY flat, QQQ a little red, IWM flat, VIX flat. So when CRE is still up almost 195%, that's not market beta. That's float, volume, and liquidity. XPON is still on the board. SOAR is doing the penny stock volume thing. YYGH is hanging around the top 4. And oof, RDIB, still that insane relative volume print lower on the board. So we're not just reading green numbers here, we're ranking which charts are actually holding bid. CRE first. Pulling the 1 minute, because this is the scoreboard name right now. Price on the board is 757. Volume already 44 million shares. Relative volume 151, and the float is only about 1.1 million. That is a wild tape, not a normal stock. This is the kind of low float runner where a clean candle can turn into a rug pull fast. For me, 725 is still the line from earlier. It lost it, now it's back above it, so I want to see if that reclaim actually sticks. If CRE starts accepting above 775, then buyers are still pressing. If it slips back under 725 again, that's the failed reclaim look and momentum holders can get jumpy fast. No need to worship the percentage move. Watch the level. XPON now. This one's sitting right under the $10 handle. $9.94 on the board, up 88%, so yeah, still a monster move. But the personality changes right here. $10 is the fight. If it keeps rejecting under 10, that open $11 momentum callout starts getting pretty optimistic, because you need buyers to actually reclaim the round number first. Volume's legit. 17 million shares, about 17 times relative volume, and the float's under 1 million, so it can move fast both ways. For me, the clean version is 10 reclaim, hold it, then maybe that 11 area comes back into play. If 10 keeps acting like a lid, this is where chasers can get chopped up. Now, SOAR. Totally different animal. This is a 26 cent penny stock, and the volume is absurd. 303 million shares already, almost 200 times relative volume. So liquidity is there, but that doesn't automatically make it clean. With these $quarter names, the question is, are buyers defending that 25-cent area, or is this just a huge volume fade after the morning pop? 26 cents is the little pressure point I'd watch for upside momentum, but if it keeps losing 25, that's where the tape can turn into a grind down pretty quickly. Medium dilution risk on the board too, so don't treat this like a normal large cap breakout. It's a fast penny stock tape, not a quality contest. YYGH next. And this is the kind of sub $2 squeeze where the chart matters way more than the headline. Board has it at $1.87, up 63%, 63 million shares traded, 26 times normal volume. So the interest is real, but here's the catch. High dilution backdrop, tiny market cap, tiny float area, and these can flip from clean squeeze to lower high fade really fast. On the 1 minute, I'm watching whether buyers keep defending that 180 area and whether it can actually build above 2. If $2 keeps rejecting, that's where momentum players start getting impatient. If it bases under it instead of stuffing, totally different tone. PSNYW now. And yeah, this one's a different lane. This is moving like a warrant-style EV sympathy trade. Polestar related, 570 on the board, up 52%. Volume 2.5 million versus a normal 70,000-ish. That relative volume is huge, but warrants and warrant-like names can be super thin, so don't treat this like a normal common stock chart. The gap risk is nasty both ways. On this 1 minute, I'd be careful chasing candles that are just spread and air. I want to see whether 550 actually firms up, and if it starts living above 6, then the tape is at least saying buyers are still around. But if 550 snaps, these can vacuum lower fast. RDIB now. And this is where the board gets really weird. 13 bucks on the quote, up about 37%, but the stat that jumps off the screen is the float, barely 300,000 shares, and it's traded over 4.6 million today. Relative volume over 1,000 times normal. I mean, that's not a little active. That's a closet doorway with the whole room trying to get through it. So on RDIB, I'm treating 13 as the pivot. If it keeps holding that area, shorts stay uncomfortable. If it starts accepting below 13, these tiny float names can air pocket fast. Now DAIC, 515, up 33%, almost 30 million shares, float around 419,000. But this is not the same quality of move. The industry tag is shell companies, dilution risk is marked high, so yeah, this has squeeze written all over it, but also trap written all over it. $5 is the line I'd be staring at here. Under that, the character changes quick. Last comparison before we leave the board. ANF is the clean one. Whole market's basically flat to mixed. QQQ a little red. And Abercrombie is up 32% at 143, 144 on real NYSE volume. That's a very different story from the low float chaos. 43 million float, 6 billion plus market cap, retail name, actual relative strength. For ANF, 144 is the spot I care about for continuation on the tape, and 140 is the first obvious reset area if this cools off. Now red side, Weto is down 34% at 1862. Still a tiny float, but volume's only 180,000, so that's a thinner downside tape, not a clean liquidity flush. And GRML down 44% at 540, high dilution risk on the board. That's exactly the kind of red mover where I'm not trying to romanticize the dip. So that's the movers board. RDIB and DAIC are squeeze quality. ANF is the cleaner relative strength name. Weto and GRML are your caution flags. All right, let's pivot now and line the headlines up with these charts, because I want to know what's actually forcing the move.
Thanks, Markets Desk. Quick stock whisperer check on the paper book. This is the show's simulated $100,000 paper portfolio, and we just opened XOM short. 60 shares, average price 160.325. It's sitting right around 160.34 now. So, basically flat. Down about 90 cents on the paper P&L. The setup is pretty clean. Crude's been under pressure on that easing Strait of Hormuz risk headline. And XOM is the liquid listed way I'm expressing that energy weakness here. I'm not chasing a collapse. The thesis is simply that the short makes sense while XOM stays below the morning news reaction area. Now the important part, the bracket. I've got the buy stop at 163.25, so if this thing squeezes back through that risk line, the paper trade is out and the thesis failed. Take profit order is sitting at 155.50, and the first confirmation I'm watching is 158.80 below us. If sellers can keep it offered and accept under 158.80, that tells me the crude catalyst is actually translating into stock pressure. If not, no drama. Defined risk, graded honestly. Coming up, we'll hand it back to the mover scan.
Thanks, stock whisperer. All right, quick news brief from the macro desk, and we start with Meta. ProTerminal's newsroom is tracking settlement talks between Meta and 29 states in that multi-state youth harm lawsuit. The key word is talks. No settlement size yet, no final terms. But for investors, this matters because legal overhangs trade like fog on the windshield. If the market gets a cleaner number, even a big one, uncertainty can come down. With QQQ sitting around 708.9, down 0.25%, mega cap tech doesn't have a ton of cushion this morning, so headline clarity matters here. Next one, oil. And yep, the Strait of Hormuz is back in the macro group chat. The desk is tracking lower oil prices tied to renewed hopes that the shipping route can reopen, which takes some geopolitical risk premium out of the barrel. Why it matters. Lower crude can help the inflation story and help energy input margins, but it can also lean on producers like XOM, CVX, and OYXY. Our live cross-asset board has oil at 126.75, up about 0.5% right now. So this is not a straight-line victory lap. It's a headline-driven market, wearing tap shoes. Now the inflation headline. July PCE held steady at 3.7% year-over-year, with core PCE at 3.3%. That's the Fed's preferred inflation gauge, so the market cares even when the number is boring, maybe especially when it's boring. The takeaway is pretty neutral. No fresh disinflation party, but no brand new inflation panic either. You can see the cross-asset translation. The dollar is firm around 28.03. Gold is off about 1.06% at 423.55. And long-duration bonds are soft, with TLT at 83.16. That's the market saying, fine, but I'm not paying full price for rate cut dreams today. GDP next. U.S. second quarter growth unchanged at 1.5%. So, not a recession siren, not a boom time parade either. More like the economy jogging on a treadmill and pretending it meant to do that. Why it matters for stocks is valuation math. Steady but not hot growth can support risk assets, but it doesn't automatically bail out expensive growth names if yields stay sticky. SPY is sitting near 765.1, slightly red, breadth mixed, so the index tape is treating this like confirmation, not a catalyst. Last one for this brief. Bitcoin and Ethereum are rallying, with Bitcoin nearing its best levels of the year. That tells you speculative appetite is still alive, even with the broader equity tape not exactly doing backflips. But here's the macro desk wrinkle. The crypto equities on our board are not chasing cleanly. Coin is down about 2%. MSTR down about 2.5%. BITO off just under 1%. So the coins are one story, the equity proxies are another. And quick reminder, because crypto likes to move like it found espresso, it's highly volatile and still a different risk bucket from listed equities. Coming up, we'll kick it back toward the movers board and see what's actually getting paid on this tape.
Thanks, Macro Desk. All right, Markets Desk is grabbing the movers board. Tape is basically flat red here. SPY down 1/10, QQQ down 1/4, IWM barely red, VIX not doing much. So these movers, this is not index beta. CRE is still the monster, 771, up 200%, 49 million shares, 167 relative volume. XPON is parked right under the $10 handle. SOAR just tagged that 26-cent level we flagged. Nice hit. But yeah, it's still a 28-cent penny name, so don't confuse a level hit with a clean stock. YYGH still hanging near $2. PSNYW just slipped under that 550 hit. We're going chart by chart now. CRE first. Okay, CRE on the 1 minute. Look at this thing. 771, up 200%, and the volume is just wild. 49 million shares against a normal day around 292,000. Tiny float too, about 1.1 million. That's why the candles can look explosive and ugly within the same minute. The earlier 725 reclaim already hit. We keep score here at the Markets Desk. Now 725 becomes the backtest line. If buyers defend that, the squeeze crowd still has something to work with. If it loses 725 and can't snap back, That's where this can turn into a failed breakout trap fast. Upside, I'm watching $8, just because round numbers matter on a low float tape like this. But I don't want to see a wick through 8 and immediate rejection. That's not strength. That's liquidity getting harvested. X-Pawn next. And this one's got that classic under $10 tension. It's sitting around $9.57, up 81%. Nearly 20 million shares traded, and relative volume is 19 times normal. That matters because the tape's not exactly ripping today. So this is stock-specific flow. Tiny float too, about 924,000 shares. So when bids stack, it can move fast. But when they pull, it can air pocket just as fast. The clean line here is $10. If X-Pawn can reclaim 10 and actually hold above it, that's confirmation that buyers are accepting the higher range. If 10 keeps rejecting, then you start treating this as a squeeze that's running into supply instead of a clean continuation. And yeah, medium dilution backdrop on this one, so I'm not marrying the move. Now soar. We did get that 26-cent marker earlier, so I'm not going to rehash the whole thing. But look at the participation here. 338 million shares. That is not a quiet penny stock move. That's 220 times relative volume. Price is around 28 cents, up about 79%. And this is where the chart has to prove it's more than just churn. Can 28 cents start to base, tighten up, and keep reclaiming dips? Or does it lose that area and slide back under those earlier markers where the Momo crowd starts backing away? It's still a penny stock, medium dilution risk, and these names can absolutely trap late chasers. So the read is simple. Volume is real, but the base has to be real too.
Thanks, Markets Desk. Breaking here at the macro desk. Pro Terminal is tracking the headline. Markets rally as yields and oil prices fall. What happened? Global equities caught a bid as the rate and energy pressure eased, and that put some oxygen back into risk assets ahead of the next macro prints and the Nvidia earnings setup. What we don't know yet is whether this is a durable rotation or just another morning headline pop with a nice suit on. The live US tape is not screaming victory lap. SPY is around 765.5, down 6 basis points. QQQ around 709.9, down 12. IWM around 298.8, off 16, and VIX is 18.66, barely lower. So the headline is risk on. The screen is more like risk on with one eyebrow raised. Classic macro. The market gets a sandwich, immediately asks if there's a catch. Next card. Sticky PCE inflation poses Fed dilemma. The desk is seeing July PCEs staying firm. And on the macro calendar, the monthly PCE print is 0.2% against a 0.1% estimate, with personal income at 0.4% versus 0.2%. Why that matters? Lower yields can help stocks breathe, but sticky inflation is the little stone in the shoe. It makes it harder for traders to cleanly price a softer policy backdrop. Not because we know what the Fed does next. We don't. But because the inflation data is not giving the all clear. That's why the bond screen matters right here. TLT at 83.15, down 0.38%, and IEF at 93.28, down 0.25%, are not exactly throwing confetti. Third headline, Nvidia earnings loom over market. ProTerminal's newsroom is tracking high expectations around NVIDIA's Q2 report, because this is not just one chip stock anymore. It's the AI spending thermometer taped to the front of the Nasdaq. The facts? Investors are focused on whether AI infrastructure demand is still running hot, and whether pricing pressure starts showing up. Why it matters. With QQQ around 709.9 and slightly red, a mega-cap AI catalyst can shift the mood in semis fast, but elevated expectations mean the bar matters. So the macro desk read is simple. This is a catalyst, not a conclusion. Coming up, the movers board gets the next crack at who's actually getting paid on the tape.
Thanks, Macro Desk. Quick Pro Terminal pit stop. This is the dilution center. And yeah, it's not the flashy page. But for the Markets Desk, this is where a lot of small cap stories either check out or fall apart. Shelves, ATMs, offerings. That stuff matters when a stock is screaming and everyone's yelling momentum. This is research context, not a buy button. Now, snap back to the movers board. This is the page we keep living on all morning. SPY's barely red, QQQ's barely red. Bread is mixed, so the outliers matter. The board shows who's actually moving, what's green, what's getting hit, and where relative volume is lighting up. But key point, a big percent move is not a trade signal by itself. It's a starting pistol for research. You ask, volume real? Float tight? News real? Dilution lurking? Let's pop one single name profile, LGCL, just to show the drill. First place I want to check is filings. Recent filings can change the whole read. Offering language, shelf registrations, capital raises, weird 8Ks. You don't want to be guessing on that while a candle is whipping around. And then flip to insiders. Same idea. You're not treating one insider row like gospel, but you want the context on screen. If something's incomplete or delayed, fine. You know that, and you size the confidence accordingly. But flying blind? Oof. No thanks. And then, this is the fun part. The 1-minute terminal chart. Same screen we use when we're reading wicks, volume bursts, VWAP behavior, all of it. Movers board tells us where to look. Chart tells us how it's trading. Filings and dilution tell us what can blindside the tape. That's ProTerminal in one loop. Coming up, we're right back into the Market Movers scan. And if you want the same screens we're using live, sign up at proterminal.io.
All right, let's rip through the movers board. Markets desk is back on the hot list. And yeah, this board is way louder than the index tape. SPY down a hair, QQQ red, IWM red, VIX basically parked, breadth mixed. So when CRE is sitting up over 200%, XPON up 80 plus, YYGH up mid-70s, SOAR ripping on hundreds of millions of shares, that is not broad market beta. That's event tape, squeeze tape, tiny float tape. First pass, CRE is still the king of the board. XPON is pressing that under $10 tension. YYGH is still on the radar, and SOAR is the pure volume monster. Downside, GRML and WETO are still the ugly names. We're going chart by chart now. No wasted board staring. CRE first, because this is still the scoreboard stock. We're on the 1 minute. Price around 7.77, up about 200%. 51 million shares traded. Relative volume around 175 times normal. And the float is only about 1.1 million. Oof, that's a lot of hands passing through a very small door. The two numbers already on our board still matter. $8 above, 725 below. 8 is the continuation test, not just a quick wick. I want to see acceptance if it gets there. 725 is the failed breakout backtest line from earlier. So inside that band, this is chop/squeeze territory. Outside that band, the tape starts giving cleaner information. The thing I'm watching on this 1 minute is where the volume shows up. If the big volume candles are only selling candles and the pops get smaller, that's exhaustion. If bids keep refreshing near the upper half of the range, then buyers are still at least making a fight out of it. Fun chart, dangerous chart, tiny float, giant RVOL. No autopilot here. XPON next, and this one's a totally different kind of pressure cooker. We're under $10, around 970, up 84%, 21 million shares traded, and the float's listed under 1 million shares. So yeah, when this thing starts moving, it can get jumpy fast. The whole question on the 1 minute is really that $10 area. Do buyers actually accept it above 10, or is 10 just where the offer reloads and everybody who chased the breakout gets stuffed? With a medium dilution risk tag and that kind of float, I'm not treating the headline move like the whole story. I want to see whether dips keep getting bought near VWAP, or whether every push into 10 turns into a lower high. Now, YYGH? Quick check only, because this is still top 3 heat, but it's also one where you've got to respect the dilution risk. Price is basically around the $2 zone, up about 75%, and the tape is enormous. 66 million shares, almost 28 times average volume. So for me, this isn't about telling a perfect story, it's about watching the current candle behavior. Are we seeing clean holds and higher lows, or is it just huge volume getting absorbed with wicks on every pop? High dilution risk name, Small market cap, tons of turnover, that combo can run, absolutely, but it can also flip from momentum to supply really fast. Soar now, and this is the penny volume monster on the board. We're talking about a 27 cent stock doing 362 million shares. That's not a typo. Relative volume 236 times normal, so the tape is absolutely crowded here. But because it's sub-dollar, you've got to treat the candles way differently than CRE or XPON. Spreads can get goofy, size can disappear, and the same crowd that chases it can vanish fast. The spot I care about on this one is that 28-cent area. If it tightens under there and keeps knocking, okay, momentum is still alive. If it keeps rejecting 28 and starts leaking back toward the fade line, that's usually where these penny runners get sloppy quick. Flip side now, GRML. This is the ugly side of the board, down 44%, around 540. Small float, about 2.5 million. Dilution risk marked high. And the volume is only about 1.8 times normal. So this is not the same kind of emotional volume storm as SOAR. On the 1 minute, I'm not looking for hero candles here. I'm looking for whether buyers can actually build a base, or if every little green candle just gets sold into. Around this 540 area, if it can't stabilize and keeps making weak lower high bounces, that tells you the offer is still in control. A real bounce needs cleaner holds and some follow-through volume, not just one random pop off the lows. Alright, now ANF. This is the clean relative strength check. And this is a totally different animal from the low float chaos we've been staring at. We're on the 1 minute, price around 144.75, up about 33%, and the key thing is this is a $6 billion retail name, not a 1 million float vacuum. SPY and QQQ are a touch red, small caps are a little red, and ANF is still sitting up here with real volume, 4.2 million shares versus about 1.5 million average. That prior 144 level we flagged? Yeah, it got hit. Now I want to see if 144 turns into support instead of just a headline spike. Above 144, the tape still looks like institutions are accepting the higher price. Lose it cleanly, and you can get that post-news digestion candle pretty fast. Last one on this pass. Weto on the downside. And yeah, this one's nasty. Around 1892, down 33%. Tiny float listed at about 176,000 shares, so the candle can look calm for 2 minutes and then completely air pocket. Volume's only about 200,000 shares, but that's still 4.5 times normal for this thing. So there is activity here. What I'm checking on the 1 minute is simple. Is the offer still stepping down, or are we finally building a relief base near 19? If 19 keeps rejecting from underneath, sellers are still in control. If it can reclaim 19 and actually hold it for a few candles, then at least the panic selling is slowing. Not saying it's fixed, just saying the tape changes. Alright, that's the movers board heat check. We've got the wild small caps, one clean large cap outlier in ANF, and a couple downside traps. Let's pivot from the board and hit the next live setup. Alright, let's pull up Google. Mega cap check, because the QQQ is only down a touch, and this one is acting heavier than the tape. Here at the markets desk, this is exactly the kind of relative weakness I care about. Stocks around 342, down about 1.25%, while QQQ is only off 0.14%. So yeah, not a disaster market-wide, but Alphabet is not helping big cap tech right now. On the daily, look at the structure. This is not a clean trend anymore. Earlier run pushed up near 400, volume confirmed that move, and then it just started digesting. Broad range, lower energy, less conviction. Current daily read has Google near 342, basically sitting near the lower side of this recent 340 to 360 box. That 360 area matters because you've got the range top, and the moving average cluster is up around 350-ish. So, until it can even get back through that zone, it's still a laggard, not a leader. Downside, 340 is the first line. If that cracks and stays below, then the market starts looking at the longer-term 200-day area closer to 334. Not predicting it, just mapping the tape. Right now it's range-bound, but it's pressing the lower rail. Okay, now let's drop down to the 1 minute, because this is where the damage happened. Oof, look at that flush. Open was up near 347.32, then the sellers hit it hard around 346.88. Big red breakdown toward 343.61. And that candle came with a volume spike over 480,000 shares. That's not a lazy drift. That's real sell pressure showing up all at once. Since then, bounce attempts into the mid 344s and 345s have failed, with the lower high area around 345.96. So, for the live tape, I'm marking 346 as the reclaim zone. Above that, maybe the sellers lose some control. Below the low, near 341.70, that's where the morning low breaks, and this gets uglier fast. Quick catalyst check. I don't see a clean, fresh company headline explaining this exact intraday slap. The recent press release feed is mostly investor alert legal notices, plus a Google Cloud Enterprise AI collaboration from last week. So this looks more like tape and positioning than some obvious new headline, at least from what's on the board. Bottom line, Google is a mega cap laggard today. Watch 340 on the daily, watch 346 on the intraday reclaim. Coming up, we'll swing back to the movers board and see if the small cap heat is still holding while the big boys chop around. All right, off the mega cap grind, let's hit the movers board because this single name tape is cooking. SPY flat, QQQ basically flat, IWM a little red, so this is not broad market beta doing the work. This is straight up stock specific chaos. Top of the board, CRE still huge, up about 183%. XPON is still hanging near a double. SOAR still a monster percentage move down in penny stock land. YYGH and PSNYW are still on the green side, but both have that fast unwind feel we've been tracking. And then look at the other side, GRML and WEDO getting smacked. So here at the markets desk, we're not reading this like a calm tape, we're reading it like a level tape. Who's holding? Who's fading? Who's trapping late buyers? CRE, first, quick status only, not the full stat rehash. We're on the 1 minute. Price is sitting around 726, still the top name on the board, but oof. This is exactly where you have to separate headline percentage from clean trade structure. Tiny float, tiny market cap, huge intraday move. That means the candles can look great for 3 minutes and then just disappear on one red bar. For me, the near-term scoreboard is simple. $7 is the danger line. If CRE starts living below 7, that tells you the chase bid is losing control. On the other side, 750 is the first area where buyers have to prove they can actually repress this instead of just defending. Not saying chase it, absolutely not. I just want to see whether the tape accepts higher or whether every pop gets sold into. Right now with the market flat, CRE is its own universe. XPON next, and I'm not going to redo the whole setup, but this is the spot we cared about earlier, that $10 reclaim. We're around 1028 now, still up about 95%. And the key is super simple. Are buyers actually accepting above 10, or was that just a pop through and reject? Volume's already massive here. 23 million shares, about 23 times normal, and with a sub-million float, this can get jumpy fast. So for me, $10 is the scoreboard level. Above it, the tape still looks like buyers are willing to pay higher. Lose it clean, and yeah, then you start asking if the chase crowd is getting trapped. Now, SOAR. Totally different animal. This is a 29-cent stock, so keep the penny stock brain on here. It's up huge, about 87%, and the volume is absolutely wild. 392 million shares, 256 times normal. That's real attention, no doubt. But the question is whether that prior base around the high 20s is still a base, or if it's turning into supply. If this keeps holding around 28, 29 cents and curling, okay, momentum traders are still defending it. If it starts living under that area, that's where these names can fade ugly, especially with medium dilution risk in the background. Not hyping it, just watching whether the base is actually real. RDIB next. And this one is sneaky, because it's not sitting at the very top of the board, but the volume profile is insane. We're talking about a stock around 1270, up about 34%. But the relative volume is over 1,000 times normal. Average volume's only about 4,000 shares, and today it's already traded roughly 4.7 million. So yeah, that's how you get these weird, jumpy 1-minute candles. Tiny float too, about 300,000 shares. So I'm not treating this like a smooth trend, unless the chart proves it. For me, 13 is the upside line where momentum has to keep accepting higher prices, and 12 is the danger line where this starts looking way more trap-like than clean. Between 12 and 13, it's just chop and a very thin name. Now flip to ANF. because this is the grown-up version of the movers board. Abercrombie's at roughly 146.40, up 34%. But this is a $6 billion retail name, not a $2 million micro float. Volume's about 4.6 million, roughly 3 times normal. So the question here is completely different. Is the earnings style strength still orderly, or are we starting to see profit-taking candles stack up? I like watching 145 as the first real intraday sanity check. If it keeps holding above that area and building higher lows, that's controlled. If 145 starts failing, then the move can still be up big on the day, but the intraday character changes. And above it, yeah, everyone sees 150. Not a target, just the obvious round number battleground on a move this big. After this, I want the loser board because those downside levels we flagged are coming back into play. Quick loser board check now. GRML first. Remember we had that 540 area open on the scoreboard. And yeah, this thing is basically sitting right there around 537. So that's not a clean stabilization yet. It's trying to stop the bleeding, but it has not actually reclaimed the level. Volume's about 1.5 million, relative volume just under 2 times. So compared with the crazy gainer board, this is a much slower tape. And with high dilution risk on the profile, I'm not treating one green 1-minute candle like it magically fixes the chart. For GRML, the scoreboard is simple. Back above 540 and holding would at least show buyers are fighting. Staying below it keeps the downside pressure in control. Now Wedo, same idea, but way thinner. We flagged 19 earlier, it's around 1831 now, so that level is still overhead. Tiny float, about 176,000 shares, and the volume is elevated versus normal, but the candles can get jumpy fast. Under 19, it still looks like a loser board name trying to stabilize, not one that's clearly stabilized yet. Alright, let's go straight into VMAR. This is the small cap tape the markets desk cares about right now. Flat indexes, mixed breadth, and this thing is up about 27%, around the $9 area. Tiny float too, roughly 670,000 shares. So yeah, it can move. But that also means it can whip, halt, and rug pull fast. This is levels and volume only. No hero stuff. Oof, look at the structure. Clean expansion off roughly $7, then that grindy base from about $7.50 to $8.50. And then boom, the real candle expansion comes through $8.50. That's the spot. Volume actually confirmed there too, with the bigger 1-minute bars showing up into the push from the high 7s through 9 and change. High of day is right near 980, and now it's not exploding anymore. It's digesting. Latest candles are basically chopping 910 to 930 on lighter volume. So for me, the scorecard is simple. Above 980, it has to prove fresh demand. Below 850, that breakout base starts looking failed. Between those two, it's chop after a parabolic move. Quick catalyst check on VMAR. The recent headlines are enough to explain why scanners are finding it. Yesterday, a US patent application tied to eMotion charging protection. Monday, a letter of intent for a proposed business combination with an undisclosed counterparty. And last week, that Avacus, HD Hyundai-related integration partnership. That's headline fuel. But notice what I said, headline fuel, not clean fundamental confirmation. On these small names, the story can light the fuse, but the chart tells you whether buyers are still paying up.
Thanks, Markets Desk. Quick top-of-the-hour reset if you're just joining us. It's 11:02 a.m. here on Wednesday, and the tape is basically doing that awkward elevator shuffle. SPY at 766.14, up 3 basis points. QQQ at 710.29, down 6 basis points. IWM at 298.74, off 17 basis points. And VIX 1869, barely green. Breadth is mixed, so this is not a clean risk-on party. It's more like everybody showed up, but nobody wants to dance first. For QQQ, the intraday box is pretty clear. 712.2 is the top of the morning range. 708.4 is the floor. And we're chopping right in the middle near 710. That's the market saying, show me the next catalyst. And here's the macro chain underneath it. Bond proxies are a little heavier. TLT 83.24, down 0.28%. IES 93.32, down 0.20%, so yields are firming in direction. The dollar is up 0.32% at 28.03. The yen proxy is softer, gold's getting hit. GLD down 1.44% to 421.91. And crypto beta is not loving it. BITO down 1.49%, coin down 3.2%, MSTR down 4.12%. That's the market's way of saying the dollar and rates are still the bouncers at the club. Oil's actually green, up 0.91% to 127.30. So the earlier diplomacy relief story is not a straight line anymore. We also just got the MBA 30-year mortgage rate at 6.78. And the bigger macro dump is still ahead at 12:30. GDP, durable goods, PCE prices, personal income. So here at the macro desk, I'm watching QQQ 712.2 above, 708.4 below, VIX 19, the dollar at 28.03, and that 12:30 data window. Coming up after this, we've got another market mover scan, then the news intermission.
Thanks, Macro Desk. Let's hit the movers board, because the indexes are basically chopping and the single name tape is still wild. SPY is barely green, QQQ slightly red, IWM red, VIX not doing much. So yeah, mixed tape. But look at this board. CRE still up 161%, SOAR up 110, YYGH up 70, XBON still hanging near plus 69. That's not broad market strength. That's momentum crowd, low float crowd, relative volume crowd. And oof, RDIB still showing 1,000 plus relative volume on the board. That is not normal volume. First pass here at the markets desk, I want the names where the price is still accepting higher, not just the ones with the biggest percent gain printed on the screen. Alright, CRE first. Pulling the 1 minute, and this is the update, not the whole story again. Earlier level was simple. Did 7 hold, and could 750 reclaim? Right now, price on the board was 673. So nope, 7 did not hold clean. That matters. This is still up huge on the day, don't get me wrong. But when a 1.1 million float name runs this far and then starts living under the whole dollar level, the tape gets way less clean. I'm watching whether buyers can actually reclaim 7 with volume, then 750 is still the real proof line above. If it keeps rejecting under 7, that's not momentum anymore. That's bag handoff risk. Fast name, thin name, no victory laps unless the candles prove it. SOAR now, and this one is just monster volume. 434 million shares traded, relative volume almost 284 times normal. So yeah, the tape is awake here, but the level is super clean. 33 cents is the battleground right now. If it can keep accepting above that area, bulls are still defending the move. If it slips and starts living back under it, then I'm looking right back down at that 28-cent base that got hit earlier. And quick risk flag, this does have dilution data on the board, medium risk. So with a sub-dollar name like this, the chart can look great for 5 minutes and then get really messy fast. Volume is real, but don't confuse volume with safety. YYGH next, new name on the board, up about 70%. And this is where I want to see if $2 turns into acceptance or just becomes the rejection spot. Price is sitting right around 195. Volume's already 68 million. Relative volume about 29 times. And the float on the board is tiny, just over 2 million. That's why these candles can stretch so hard, but it's also why the fade can be violent if the bid disappears. So for me, $2 is the line everyone sees. Above it, momentum traders are probably still interested. Under it, especially if it keeps failing and can't reclaim, that's when this starts looking more like a pop and fade instead of a clean continuation. XPON now. Quick check only, because we already know the story here. Tiny float, industrial battery name. Up basically 69%. 25 million shares on about 25 times normal volume. So I'm not relitigating the whole setup. The level is 9. That's it. It's sitting just under $9 right now. And if buyers can't actually accept above that, this turns into another small float pop that keeps rejecting the obvious round number. If it does hold above 9 with volume, then yeah, the tape is still alive. But below that, I'm watching for the lower high look to start creeping in. Now, don't throw PSNYW and OMH into the same bucket, even though they're both green on the board. PSNYW first. That's the Polestar warrant line. EV-related strength, up about 51%, and the volume is real versus its own average. 2.6 million shares, 38 times relative volume. Warrant lines can trade weird, so I'm treating $6 as the clean acceptance check, not pretending it trades like a normal common stock. Now flip OMH. Totally different animal. This is a 14-cent real estate platform stock, up 47%, but the relative volume is insane, at 544 times normal, and it carries high dilution risk. That's the kind of tape where 15 cents matters, but one ugly flush candle can change the whole feel fast. Under 12 cents for me, that's where the momentum look starts to break down pretty quickly. RDIB, now, this is the weird one on the board, because it's only up about 37%, but the relative volume is absolutely stupid. We're talking almost 1,100 times normal volume on a float under 300,000 shares. So on the 1 minute, the scoreboard is really clean for me. 13 is the acceptance line. If this can actually live above 13, not just wicket and reject, then the tape is still respecting the squeeze. But if it loses 12, that's the failure line. Below 12, you've got a lot of late momentum, probably rethinking it fast. And with floats this small, it can move $1 like it's nothing. So don't treat this like a normal mid-cap chart. It's a scoreboard name. 13 above, 12 below. Last quick pass, loser board, because this matters too. Wedo is down 36%, and the volume is elevated, about 5 times normal, so that's not just a sleepy pullback. Tiny float, software/robotics story, recent filings showing up on the board, and the pressure is real. Then GRML, down 44%, high dilution risk on the board, and even though relative volume is only about 2 times normal, that kind of red candle can still wreck anyone chasing yesterday's move. So yeah, the green side is exciting, but the red side is the reminder. Small caps punish bad entries fast. And then ANF, totally different animal. Real company, 6+ billion market cap, up 35% on over 3 times volume. In a mixed tape where SPY is basically flat and QQQ is a touch red, that's actual relative strength, not just microfloat chaos. Alright, mover scan is done. Next up, we're going to shift off the board and hit the next story on the tape.
Thanks, Markets Desk. Quick paper book check from the Stock Whisperer. This is the show's simulated paper portfolio, and the new piece on screen is BABA. Short 80 shares. Average price 120.88. Basically flat right now with price around 120.89, down about 80 cents on the position. The reason for the trade is clean. Alibaba raised $10.2 billion through a Hong Kong secondary share sale, and the stock is under pressure from that new supply. My thesis is not complicated. The short only makes sense while it stays below that post-news rebound zone. The bracket is defined. Simulated stop is 124.20, simulated cover limit is 115.50, and the real continuation tell for me is below 119.50. Rest of the book is still disciplined, no drama. DKS is short 50 from 128.915, trading 129.10, so that one's down about $9. Tiny, but not working yet. XOM is short 60 from 160.325, marked right at entry, so flat. The working brackets are still live. DKS has the stop up at 134.20 and cover order down at 119.50. XOM has the stop at 163.25 and cover order at 155.50. Cash is sitting around 97.17K. On the watch side, I'm still watching NVDA only above 215 with QQQ participation, and for BABA, 119.50 is the pressure point. Again, simulated account here, or grading process, not telling anyone to copy trades.
Thanks, Stock Whisperer. All right, quick news brief here from the macro desk. Lead story. Global shares are leaning softer because tech pressure is offsetting what should normally be a little relief from lower oil and treasury yields. The desk is tracking caution around the big AI names, with Nvidia still the sentiment magnet for the whole trade, plus US-Iran tensions sitting in the background. Why it matters? When QQQ is basically flat around 710.7 and VIX is still near 18.69, the market is not panicking, but it is asking tech to justify the multiples. Very polite interrogation, market style. Next one. U.S. equities are still getting help from AI enthusiasm and strong earnings, but the bond market is waving the yellow flag from the cheap seats. The fact pattern here is simple. Investors like the AI growth story in names tied to Nvidia, Apple, and Microsoft, but the long end of the treasury curve is still under pressure from fiscal concerns and heavy supply. Live cross-asset check. TLT is around 83.27, down about 0.25%. So the equity side is saying growth, and the bond side is saying, yeah, but who is paying the bill? Classic macro dinner argument. Alibaba is the single main headline. Baba raised $10.2 billion through a Hong Kong secondary share sale, the largest there, aimed at funding AI infrastructure. The stock took an almost 8% intraday hit because the market saw the discount and immediately did dilution math. Why it matters. AI capex is not free money. For investors, this is the other side of the AI boom. The strategy may be long-term, but the share count impact is right now. The macro desk calls that the toll booth on the AI highway. Emerging market currencies are also on the board, hitting a record high as Fed rate hike bets ease. That usually helps risk appetite because less pressure from U.S. rates can pull capital back toward EM currencies and equities. But here's the wrinkle. The live dollar proxy is still around 28.02, up about 0.29%. So this is not a straight line dollar collapse story. It is more like the market loosening one bolt, not taking the whole machine apart. Last one for the brief. Energy is posting all-time highs while the broader S&P has been pulling back. That is the rotation story in one sentence. Growth gets questioned, barrels stay bid. Live oil is around 127.48, up about 1.05%, and that matters because energy strength can support sector leadership while also keeping inflation nerves alive. So the tape is mixed for a reason. SPY near 766.4 is calm. But under the hood, capital is still picking winners and losers. Coming up, we kick it back to the market movers scan and see where that rotation is actually hitting the tape.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. This tape is basically sleeping up top. SPY flat, QQQ a hair red, IWM still soft. But down here, completely different planet. CRE still top of the board, up about 158%. SOAR is still doing penny stock chaos with almost 480 million shares traded. XPON right behind it. Then OMH, YYGH, PSNYW. And yeah, don't ignore the other side. GRML and WETO are still getting hit. So the job here is simple. We're not marrying any of these. We're checking. Where's volume still real? Where's the reclaim? And where's the trap? Let's start with CRE on the 1 minute because this is still the scoreboard name. CRE is around 662, up 157%. And the big number is the volume, 54.8 million shares against a float around 1.1 million. That's not normal activity. That's the whole float turning over again and again. Earlier, that $7 failure mattered. Now I want to see if 650 actually holds as the new battle line, or if this starts leaking into lower high fade mode. Above 7 with real volume? Okay, then buyers are trying to reclaim control. Below 650? Oof. That's where this stops looking like momentum and starts looking like distribution. Tiny market cap, tiny float, huge range, clean levels only, no hero stuff. SOAR next. And yeah, this is the penny stock chaos part of the board. We're on the 1 minute here. Stocks around 28.5 cents, up about 82%. And the number that jumps off the page is volume. Basically 478 million shares traded. That's not normal liquidity. That's the whole crowd piling into one lane. The 28-cent area just got hit again, so this is the line for me on the tape. Can it actually stay above 28, build candles, and stop instantly wicking back under it? If it holds above there, momentum's still alive. If it keeps losing 28 on every pop, that's where these names can turn into churn really fast. Medium dilution risk on the data too, so I'm not treating this like a clean large cap breakout. It's a penny runner, and the level matters more than the story right now. Now, X-Pawn. Totally different price zone, but same small float energy. This thing's around 930, up roughly 77%, 26 times relative volume. And the float is under 1 million shares. So when you see it move, it can move in chunks. But that also means the trapdoor can open quick if volume backs off. On the 1 minute, I'm reading the $9 area as the big sanity check. Above 9, buyers are at least defending the breakout zone, and you can see why momentum traders keep it on screen. Under 9, especially if it starts accepting below there instead of snapping back, that's where the move can turn from momentum into a late chase trap. Not calling a trade, just saying 9 is the line that tells you whether this is still controlled or starting to get sloppy. OMH now, and this is the silly volume one. We're talking about a 16-17 cent stock doing about 69%. But the headline is the relative volume. Over 1,000 times normal volume. That is not a typo. So on the 1 minute, I'm not trying to overcomplicate this. I want to see if 16 cents is actually being defended, and if 17 cents can turn from a spike area into support. But big warning on this one. Dilution data is on. Risk is marked high. And when you get a tiny real estate platform name trading 80+ million shares, you treat every push like it can flip on you fast. YYGH next. This one's cleaner price-wise, sitting around $1.92, up about 67%. But same issue, high dilution risk. So I'm not giving these things the benefit of the doubt just because the percent gain looks pretty. Volume is real, almost 69 million shares, about 29 times normal. So now the tape question is simple. Are buyers still stepping in near that 190 area, or is this just late chase volume after the move already happened? If $2 starts acting like a ceiling, that tells you a lot. If it starts accepting above there, then at least the chart has confirmation, instead of just a vertical headline move.
Thanks, Markets Desk. Breaking macro cross right now. ProTerminal's newsroom is tracking sticky July inflation with second quarter GDP growth unrevised at 1.5%. Here's what we know. The GDP growth rate is landing right on the 1.5% estimate, so growth isn't cracking on this print. But the inflation side is the thorn in the shoe. July PCE prices are showing 0.2% month over month versus 0.1% expected. And the GDP price index is 6.4% versus 6.3% expected. So, not a growth scare, but not a clean disinflation victory lap either. What we don't know yet is how much of this the Fed wants to look through versus lean against. Market reads so far, SPY is basically flat around 765.8. QQQ's off a tenth near 710. IWM's a little heavier, and VIX is up around 18.76. Translation: the equity market is not throwing a chair, but rate-sensitive stuff is listening very carefully. Next headline: markets are now seeing a slightly higher chance of another Fed hike after that inflation data. Important wording there, this is pricing, not a Fed decision. And here at the macro desk, we try not to cosplay as the FOMC. Why it matters. If the market nudges toward a less dovish Fed path, duration usually feels it first. Long bonds are already soft, with TLT around 83.28, IEF around 93.36, and the dollar proxy up near 28.02. That's the classic macro seesaw: firmer dollar, softer bonds, pressure on expensive growth, and the higher beta sandbox. You can see that in crypto-linked names too. BITO off about 1.45%, Coin down just over 3%, NSTR down about 3.7%. The bond market, as usual, is being the designated adult at the party. Annoying, but useful. And then a big single-name regulatory headline: Meta has agreed to an $18 billion settlement tied to a lawsuit brought by 29 states over alleged social media harms to children. That is not a tiny footnote. That's a real legal and regulatory overhang for one of the mega-cap platforms. Why investors care? Meta's story is usually ads, AI spend, margins, and engagement. but a number like $18 billion reminds the tape that regulatory risk can jump from background noise to balance sheet math pretty fast. In a QQQ tape that's already a little red near 710, big tech headlines matter more because the index doesn't have a lot of cushion. Coming up, we'll kick it back toward the market mover scan and see what's actually holding bids after this macro print.
Thanks, Macro Desk. Let's pull up AMZN quick. Daily chart first. This is not leading the tape today. SPY is basically flat, QQQ's a hair red, and AMZN's down about 0.5% around 260. Bigger picture, still above the 50-day area near 251, so the long-term trend isn't broken. But short-term, it's stuck below that 20-day zone around 266. Oof, look at that stall. The daily read is simple. 257 is the support shelf I'm watching below, 270 is the upside wall above. Until one of those gives with real volume, this is chop inside a range. Okay, let's drop down to the 1 minute. This is why the markets desk lives on the tape. AMZN is just ping-ponging around 260. Not clean trend, not panic, just a base. Buyers showed up near 259.20 on volume, sellers have been leaning around 261.20, and 260 is the magnet right now. If it accepts above 261.20, that's the first sign this little base is trying to resolve higher. If it loses 259.20, then the intraday range starts looking heavy fast. No hero call here, just levels. Coming up, we'll hit the mover scan and see where the actual heat is. Alright, let's rip through the movers board. Indexes are basically flat, so if something's up huge here, it's doing its own thing. CRE is still the monster at the top, 671, up 161%. 55 million shares, 189 times relative volume. Oof, that's not normal volume, that's a tape event. Soar's next, 28-cent stock, up 79%, 500 million shares traded, and yeah, that upside flag from earlier got tagged. Nice score, but penny tape gets nasty fast. XPON is still hanging near that $9 battleground. YYGH and OMH both trip downside checks, so don't just see green and assume clean. This board is hot, but it's not all clean momentum. CRE, first on the 1 minute. This is the top of board name and it deserves the first chart, but keep your eyes open. 1.1 million float, microcap market value, and already up 160%. The markets desk read is simple. 650 is still the line where this stops looking like controlled momentum and starts looking like distribution. Above that, fine, buyers are still defending the move. But $7 is the next obvious decision spot. If it accepts above 7, the squeeze crowd stays interested. If it keeps wicking into 7 and snapping back, that's supply showing up. I'm not pretending this is clean, just because the percent move is huge. I want to see higher lows on the 1 minute and volume staying with it. Soar next. And yeah, there's that 28-cent area we were talking about. It hit it, it's trying to hold around it, but don't let the percent move fool you. This is still a 28-cent penny stock tape. Huge liquidity on the board. Over 500 million shares, 300 plus relative volume, so the volume is real, but it's also a ton of share churn. The clean version for bulls is pretty simple. It needs to accept above 30 cents, not just wick it, actually hold candles up there. If it keeps failing under 0.30, that's where these can do the classic penny stock fade. Pop, stall, reload sellers. So for me, 28 is the little battleground right now, 30 cents is the acceptance test. Now XPON, totally different price point, but honestly maybe even more squeezy, because the float is tiny. We're talking under 1 million shares in the float, and it's already traded 27 million shares today. That's why the $9 reclaim matters. Right now, price is sitting just under it, around $8.80. So every push into 9 is basically a test. Are shorts trapped and buyers still paying up, or is 9 just the ceiling where momentum gets stuffed? If XPON can build above 9 and not instantly reject, that's constructive tape. If it keeps poking above and snapping back under, that's the trap read, especially on these low float names where the candle can look amazing for 2 minutes and then rug right back through VWAP. YYGH now. And yep, this is the follow-up spot. That 190 downside line we flagged, it got tagged. So now the question isn't, is it strong because it's up 64%? The question is, do buyers actually show back up under $2? because $2 is the ceiling on this tape right now. Every push into that area, sellers are leaning on it. You've got about 69 million shares traded, almost 30 times relative volume, so it's active, no doubt. But high dilution risk is sitting right there in the background. So for me, this is a very simple read. Below 190, momentum gets sloppy again. Back over 2, then maybe the crowd wakes back up. Until then, it's bounce attempt, not clean breakout. OMH is wild, man. 15-cent stock, up 53%, and the relative volume number is just stupid. 1,600 plus times average volume. That's not normal participation. That's a full reset in attention. But the chart has to prove it can keep that attention. The battle zone is 15 to 17 cents. 15 is where you don't want to see it just leak and accept lower. 17 is where the chase starts getting tested again. And same deal here. High dilution risk, recent filings, penny stock tape, this can move fast both ways. If it keeps rejecting 17, I don't care how big the volume number is, that can still fade. If buyers reclaim 17 with real candles, then at least it's showing demand isn't done yet. PSNYW now. This one's cleaner than some of the straight-up low-float chaos we just looked at. Polestar warrant-style tape, 559, up basically 50%, and volume's almost 39 times normal. So the read here is different. I'm not treating this like CRE or XPON where every candle can be a rug pull. I'm watching whether it keeps accepting above that 550 zone, because if it starts living below there, the move gets way sloppier. All right, give me RDIB, and this is the spicy one. Reading International near 13 bucks, up 36%, but look at the float, under 300,000 shares. That's why the tape can look insane on only a few million shares. 13 is the obvious magnet here. Above it, shorts can feel pressure. Below it, these tiny float names can snap back fast. Clean move? Not really. Tradable chart? Sure, but it's squeeze tape, so you've got to respect how thin it is. Now let's flip the board and check the ugly side for a second. GRML first. This is down 43%, 552 last, and it's not even crazy relative volume compared with the gainers, about 2 times average. So that tells you this is more of a steady damage chart than a wild upside chase. 550 is the line I'd keep on the screen here. If it can't reclaim that area cleanly, sellers are still in control. WETO next. Tiny float, only about 176,000 shares, and it's down 35% around 1850. That combo is dangerous both ways, because thin float doesn't only squeeze up, it can air pocket down too. And then here's the contrast. ANF. Big boy compared with everything we've been watching. 6.4 billion market cap, up 37%, nearly 4 times average volume, while SPY and QQQ are basically flat to slightly red. That's real relative strength. Totally different animal from the penny and microcap runners. All right, that's the movers board hit. Coming up, we'll shift from the chase names into the bigger market story and see what's actually driving the tape.
All right, quick tool break from the market's desk. This whole board we're living on, the levels, the volume checks, the risk checks, it's all pro-terminal. First thing I want on screen is the dilution center, because oof, small cap momentum without checking shelves, ATMs, offerings, that's how traders get blindsided. This isn't a buy signal machine. It's a research cockpit. Now back to the movers board. This is the heartbeat of the show. You've got gainers, losers, price, percent move, relative volume, the stuff that tells you where the tape is actually alive. CRE, SOAR, RDLB, ANF. We were sorting through names like these live, but the point is context. A stock being up huge doesn't mean chase it. It means, okay, why is volume here? What's the float? Is there news? Is there dilution risk? And is the chart holding up or just wicking everybody out? That's the workflow. Let's use LGCL as the example and pull the profile. This is where I want filings, news, insider activity. Not because one tab gives you the answer, but because the tape has a memory. Recent SEC filings can change the whole risk profile. Insider trades can be useful context. News can explain why volume suddenly shows up. And yeah, sometimes data can be delayed, incomplete, or just not there yet. That's real markets. The edge is not pretending you know everything. The edge is checking the pieces before you start talking like the move is obvious. And then, bang! Terminal chart, 1-minute candles, volume, wicks, VWAP style behavior, all the stuff we're calling out in real time here at the Markets Desk. If you want the same setup we're using on air, it's Pro Terminal. Movers, charts, dilution, filings, insider trades, the whole research stack. Educational stream, not personal advice. But if you want the tools, sign up at proterminal.io. Coming up next, we're going right back into Mega Cap Watch.
All right, let's pull up Tesla. Big cap, messy tape, clean levels. Here at the Markets Desk, this is exactly the kind of chart I want in a mixed market. SPY basically flat, QQQ a little red, and TSLA off about 1%. So right away, it's not leading, it's lagging the tape. Daily chart first. And yeah, this is still repair mode. Tesla had that big breakdown from the upper range, volume confirmed it, and now it's trying to build a base in the low to mid 340s. Current candle package has it around 343, 344, below the open near 345. Not awful, but not exactly power either. The first real gate is 350. That's where buyers need acceptance, not just a wick. Above 350, okay, then maybe the daily starts looking less heavy. But below that, sellers are still leaning on it. Bigger picture, it's also under the 50-day around 362 and the 200-day way up near 402, so don't confuse a bounce with leadership yet. This is a mega cap that still has work to do. Now let's drop down to the 1 minute. This is where it gets loud. Oof, look at that round trip. Early push from roughly 347.80 up into 349.50. Decent volume. Buyers had it for a minute. Then the whole thing rolls over. Lower highs, lower lows. And the sell volume actually matters. There's a heavy candle down near 343 with about 142,000 shares in that minute. That's not random noise. That's sellers taking control. Right now it's trying to base around 343.60 to 344. Smaller candles, volume cooling off. So the line is pretty obvious. 343 is the support zone. If that cracks, the intraday tape gets slippery. If it holds and curls back toward 347, then you've got a real reclaim attempt. But right now, sellers won the morning. So my scorecard on TSLA is simple. Daily, base, but still below the important stuff. Intraday, early strength faded hard, now basing at the low end of the day. I'm flagging 2 levels for the board. 350 above, because that's the daily acceptance line, and 343 below, because losing that intraday shelf tells you the base is failing. No need to overthink it. Mixed tape, mega cap laggard, level to level. Coming up, we've got small cap momentum. Very different animal. All right, quick small cap momentum hit. Pull up WSHP. Oof, look at this ramp. This was dead flat early, sitting in that 460 to 480 box, and then bang, once it cleared 520, the real volume showed up. The cleaner ignition was 540. That's where the candle stopped chopping and starts stacking. Big bars, volume over 100,000 on some of those pushes, and then it goes basically parabolic into 7. Right now, the terminal's showing it around 675, stalling just under that $7 lid. So here at the Markets Desk, the scorecard is simple. 7 above is the squeeze test. If it can't reclaim and hold that, this is just digestion after the blow-off candle. And if it loses 540 later, that's where the whole breakout structure starts to look sloppy. Now, one risk check, because this is exactly where people get trapped in small caps. WHSP has a tiny float, about 423,000 shares. So yeah, that explains the violence both ways. It can rip, but it can also air pocket. Dilution read is medium, and there's an active equity line on the profile. So I'm not treating this like a clean large cap breakout. Back to the tape. 7 is the obvious upside battle. 540 is the must-hold breakout shelf. And anything in between is chop after a parabolic move. Coming up, we've got that CDTG deep dive. So we'll keep the small cap lens on. All right, CDTG time. This is exactly the kind of tiny float chart where the candles matter more than the headline percent. Look at the tape here. Market's basically flat. SPY and QQQ barely red. IWM a little heavier, and CDTG is still up about 22%. Price around 1.21. Volume is the crazy part. nearly 26.7 million shares versus an average under 70,000. That's not normal traffic. That's a crowd showing up all at once. Okay, now on the 1 minute. This is a clean morning expansion and then a digestion trade. It opens around 117, pushes through 120 early, and then you get that bigger volume burst up into the 123, 124, 126 zone. That 126 high is the obvious ceiling now. Not magic, just where supply showed up. Oof, look at that wick up there. Buyers hit it, sellers answered. Since then, it's not an instant rug, which matters. It pulled back and started basing around 121 to 123. So the market's desk scorecard is pretty simple. Above 126, that's the breakout line. Below 120, this starts to look sloppy because that was the support shelf after the move. Between those, chop. That's where people get baited chasing every green candle. Let's check the news, because with a move like this, I want to know if there's an actual fresh catalyst, or if this is just microcap flow. The recent press releases are not a big today headline. July 28th was extraordinary general meeting results. July 7th, they announced they regained NASDAQ minimum bid compliance. That one matters for context. It tells you this has already been living around the compliance risk zone. Business-wise, this is a China-based wastewater treatment systems company. Fine. But the move today from what's on the board looks way more like volume and float mechanics than some brand new operating update. Now, the risk check. And this is why I don't get cute with these. Dilution Center flags CDTG as high overall risk. Active equity line, about 6.51 million raised over the last 12 months, 20 total offerings, and runway showing less than a month. That's heavy overhead for a tiny name. Also, profile data shows a very small float, but dilution data has a much bigger float and share count picture. So I'm treating the float story as messy, not clean. Back to the chart. The levels are the whole trade map. 1.20 has to hold if bulls want the base to stay intact. 1.26 has to clear if this wants to be more than a morning pop. Anything between those is noise until the candles prove it. Coming up, the Whisperer update is on deck, so we'll see what the simulated book is doing after this small cap heat.
Thanks, Markets Desk. Quick check-in here at the Stock Whisperer. This is the show's simulated paper trading portfolio, so we're not copying trades here. We're just grading the process. Thesis, level, risk. Open book. BABA short is basically flat to red. Short 80 from 120.88, trading 120.90, down about $1.60 on the position. That one has not paid us yet, but it also hasn't broken the risk line. DKS is the same idea. Short 50 from 128.915, trading 128.92, down 25 cents. That's noise. The two working better are Meta and XOM. Meta short 15 from 583.55, now 579.76, up about 56.85. And XOM short 60 from 160.325, now 159.94, up 23.10. Calm tape, mixed indexes, so I'm not pressing anything just because a position is green.
Thanks, Markets Desk. Breaking now from the macro desk. The US dollar is catching a bid after expanded US sanctions on Iran were announced. And that comes right after the dollar had been sitting near a 3-week low. What we know? Sanctions were expanded, the dollar bounced, and the market is treating it like a geopolitical risk headline. What we don't know yet, how long this bid lasts, whether there's a second-order policy response, or whether energy markets turn this into a bigger inflation story. Right now, the dollar proxy is around 28.02, up about 0.27%, while SPY and QQQ are basically flat. So the tape is doing that very modern thing where the headline is loud, but equities are pretending they left their phone in another room. Next headline, global equities are higher as lower bond yields and lower oil prices give risk assets a little breathing room, while traders wait on NVIDIA's upcoming earnings for the next AI temperature check. Why it matters. When yields ease, the valuation math gets less annoying for growth stocks. When oil cools, the inflation impulse gets less annoying for everyone else. That's the macro desk's whole job, really. Measuring how annoying the inputs are. The wrinkle? Our live US cross-asset snapshot isn't perfectly clean, with TLT around 83.25, down 0.26%, and oil quoted near 127.66, up 1.2% right now. So the global story is supportive, but the intraday tape is still mixed, and Nvidia remains the single name swing factor for the AI crowd. Third story. Bitcoin is back above 80,000 for the first time since May, and the desk is tracking that alongside the Iran sanctions safe haven move. Here's why this one matters. Bitcoin sometimes trades like high beta tech, sometimes like an alternative store of value, and occasionally like both before lunch, because apparently markets needed a personality test. But confirmation is not universal. The listed crypto beta is softer right now, with BITO down about 1.4%, Coin down roughly 3%, and MSTR off around 3.8%. So yes, the spot headline is important, but crypto is still extremely volatile and loosely regulated compared with traditional markets. Coming up, we'll hand it back into the market mover scan and see which single names are actually responding to this macro mess.
Thanks, Stock Whisperer. All right, Markets Desk is grabbing the movers board. And yeah, this board is loud. SPY, basically flat. QQQ, flat. IWM, a little red. VIX doing nothing, but the small cap board is on fire. CRE is the headline, up 157%. 56 million shares, 192 times relative volume, and the float is just about 1.1 million. That's a pressure cooker. SOAR right behind it, 76%. 537 million shares, insane tape. XPON, YYGH, same deal. Big percent moves, tiny market caps, a lot of chase risk. So here at the Markets Desk, we're not marrying any of these. We're scoring the tape. CRE first, then we rip through SOAR, XPON, YYGH. I want at least one downside name too, because GRML is down 44% while the rest of this board is squeezing. CRE on the 1 minute now. This is the top dog on the board, and the numbers are goofy in the way only low float momentum names get goofy. 660-ish price, up 157%, market cap around 12.7 million, and volume is basically swallowing the float over and over. Oof, that's the whole story right there. With a 1.1 million float, this can rip in a straight line, and it can rug just as fast. The level I care about first is 650. If CRE keeps accepting above 650, the tape still has control. If it starts living below that, the momentum crowd gets a lot less confident. Upside, $7 is the obvious round number magnet. Not a price target, just the place everyone can see. Above 7, you're watching if the bid actually follows it, or if it's just a wick and reject. That's the difference between real continuation and a trap candle. Flip it to SOAR now, because this one is pure penny stock momentum. 27.5 cents-ish, up about 76%. But the crazy part is the share turnover, 537 million shares. That is not a typo. Relative volume 351 times normal, so the entire story here is the bid still refreshing, or did the big volume already do its job, and now we're just chopping late buyers? On the 1 minute, I'm treating 30 cents as the clean psychological spot overhead. If it can't reclaim that area and starts living back under 27 cents, that's usually where these start feeling heavy. Also, medium dilution risk on the board, so yeah, this can trade technically, but you don't marry stuff like this. Now XPON. Totally different price point, same squeeze personality. This is the sub-million float one, only about 924,000 shares in the float, and it's doing 28.7 million shares on the day. So around $9. You can see why the candles get jumpy. It doesn't need a massive order imbalance to move. The key for me is whether $9 keeps acting like a magnet/floor, or whether every push over it gets sold right back into. If it starts basing above 9 and the volume stays there, that squeeze profile is still alive. If it loses 9 cleanly, then the tape can cool off fast, because with these tiny floats, the air pockets work both directions. YYGH is next. And this is the one I want to slow down on for a second, because the chart's right at that $2 magnet. It's trading basically $1.99, up about 73%, and volume's huge, 72 million shares, roughly 30 times normal. So the tape is absolutely there. But here's the catch. High dilution risk, tiny market cap, about a 2.1 million share float. That's the combo where the move can look super clean for 10 minutes, and then one ugly candle changes the whole mood. So for YYGH, I'm watching $2. If it accepts above 2 and the candles keep holding that area with volume, that's momentum still in control. If it keeps rejecting 2 and slipping back under, then it's probably just another squeeze that's getting sold into strength. Now flip to the ugly side, GRML, because not every mover is a ripper. This thing is down 44%, sitting around 540, and the question is whether this bounce attempt is real or if it's just a lower high after the flush. Volume's elevated, about 1.7 million shares, a little over 2 times normal, so it's active, but it's not the same crazy liquidity burst we're seeing in the top gainers. And with high dilution risk on the profile, I don't love chasing a bounce just because it's green for a few candles. For me, 550 is the first clean line. If it can't reclaim that and build above it, the structure is still lower high, lower low, sellers in control. If it does reclaim it, then at least the bounce has something to lean on. Alright, last sweep here. OMH first, and this one is just ridiculous on the relative volume line. 14-cent penny stock, up about 44%. But the real headline is 185 million shares traded versus an 80,000-ish average. That's over 2,000 times normal volume. So yeah, this is not quiet accumulation. This is full-on crowd momentum. High dilution risk on the board too. So with OMH, I'm watching that 15-cent area as the clean line. Above that, momentum traders keep carrying. Under it, these can get very slippery fast. Now RDIB, scorekeeping time. This is that super thin float name, only about 300,000 shares in the float, and the earlier squeeze level did get tagged. Current prints around 1280, up 35%. Relative volume over 1100 times average. That's why it moves like this. But after the hit, now it's about whether it can actually hold a base. 1250 is the line I'd keep on the screen. Lose that, and the squeeze can unwind just as violently as it came in. Quick contrast with ANS, because this is the grown-up mover on the board. Abercrombie at 151, up almost 39%, 6.5 million shares, and this isn't a tiny float penny squeeze. This is a real liquid large cap retail move, while SPY and QQQ are basically doing nothing. That kind of relative strength matters. 150 is the obvious psychological pivot now. And VMAR to clean it up 34%, but very different quality of tape. 670,000-ish float, high dilution risk, only about 430,000 shares traded, and the relative volume read is weirdly low versus its average. So yeah, it's on the board, it's moving, but I'm treating that way more carefully than ANF. That's the mover scan. Coming up next, quick pro terminal plug, and we'll show you exactly where all these movers, charts, filings, and dilution reads are coming from. All right, we're going to park it there from the markets desk. Mixed tape, big small cap heat, and those SOAR, XPON, YYGH, ANF levels are on the scoreboard. Stay sharp into that 12:30.